Let me take a moment to introduce our guest for today. We have Sanik sir, whose real name is Vijay. He has over 35 years of rich market experience in investment domain, and by education, he is an engineer from Bangalore, and he also did MBA from Jamnalal Bajaj, Mumbai. As far as his profile is concerned, he is a floor trader on MSC, sub broker on BSC, ex-member of NSC, and he is very keen on teaching, which is a very noble profession. So time and again he appear as a guest faculty at Stella Maris, Chennai, and several other management institutes in the south. Apart from that, we also see there are many spaces and many sessions across Twitter and other social media platforms where he contribute his rich experience. So welcome today, sir.
Yeah, thanks, Prince. Thanks. It's so wonderful to be here, and thank you for inviting me. It's a privilege and honor.
Thank you, sir. Thank you. So guys, let me give you a brief what you can expect from today's session. So we'll be discussing investing journey of Vijay sir. Additionally, like we'll be asking about how it has evolved over a period of time, and additionally how the current landscape is shaping. So we'll be knowing how had been the year 2022 and what we can look forward to 2023. So with this, let me ask a very straightforward and my initial question in all my spaces. So how it began for you, sir? Because you have been in the market for such a long time, 35 years is an era, right? So if I were to ask you, like when you began, there has to be some phases, like initial phase, and then you evolved as an investor. So could you please walk us through that?
Thanks, Prince. Many times, we begin our life because we don't like our current life. We begin a new life. So I was forced to be an engineer because unfortunately I got very good marks in the +2. I hated engineering. So, after lunch from a hostel, I used to walk down Kempegoda Road, the KG Road in Bangalore, where the Bangalore Stock Exchange was. So in 1982 is when I first forayed into investing because that seemed to be something interesting. So I have to spend quite a bit of time, almost every day, at the broker's office because that guy used to give me free coffee. So as a student, kadki lagti hai. So you go there and have free coffee. So I learned a little bit about the market. Then I started buying some few shares. Not much of pocket money, but whatever little money we got from our scholarship and all that, I put something, but not big, very very small. So after that, I ran away from. I didn't want to be an engineer, so went to Mumbai after completing my engineering, of course, and enrolled with Jamnalal Bajaj. Damn good institute, premier institute in India. And you see, I had friends there from all over the country and who were interested in the stock market. So I love to discuss about stocks. I joined my first job was in a place called Indian Market Research Bureau, which is the largest market research firm. Lunchtime, very close to Dalal Street, so we used to hang around with the sub brokers from Dalal Street. So again, whatever excess money we put it there. Again, those days the salaries were very low, even though it was a premier institute, premier establishment. Everything is okay, but at the end of the day, salaries were very low. So we did 50 shares, 100 shares that way. And then you see, when I came to Bangalore, I thought I'll leave IMRB and join JM Financial. So I went to JM Financial and gave my biodata. They rejected me because I was too qualified. This was in 1990. So in 1990, nobody had heard of the stock market. There were very few people. So they said, sir, you please don't leave your job. Then I joined advertising. I was handling Titan from Ogilvy, Bangalore. Titan was the largest agency. It's the largest client for us. So I'm a contemporary of the current MD. Both of us joined together. He joined Titan and I worked on Titan from there. C.K. Venkatraman, the current MD of Titan. So then I was posted to Madras because the bonds advertising, somebody had to be in charge. So I was posted there. And I got frustrated with this corporate world. Everything was good. Money was good. Promotions were there. But somehow it just didn't gel with my way of thinking. So I just suddenly quit. Madras, new place to me, no idea about the business of stockbroking. I know only investing. Then no family history. I don't know the language. I just jumped in and I joined as a sub broker to a sub broker in Madras Stock Exchange. Then went on to the floor of the Madras Stock Exchange. Those days, the ring is what they call, what you would have seen in the scam 92. So I joined in, I became a sub broker in 1991, went to the floor around 1994. And then two of my clients had money and they wanted somebody with experience, and they had applied to NSE. So they took me on board and I handled their NSE membership for about 25 years, 2020. And no longer, I mean, that's closed. That business is closed. So that is my basic background. My passion was stock market and investing. So this is how my story came about. Nothing spectacular, but this is how it was.
Indeed, great to listen to that. Those were the days. So sir, if I were to ask, my voice is echoing.
Yeah.
Okay.
Yeah. 1 minute.
Is it
I'll
fine
just.
now?
Yeah, it's fine. I'll switch off the mic so you can. It will not echo.
Okay, so sir, as we say in investing, in things look brighter in hindsight. So if I were to ask, like, those were the times when things were like you have to physically participate in everything, right? And now things have evolved that over a mobile you do everything, be it studying about stocks or buying or selling it. So how you see the gradual change which has happened over 2-3 decades, and what were the challenges at that point in time? And there must be some advantages, right? Because today we are in an era of too much of noise or too much of information, too much of feed to say. So how you can compare those times with current times, sir?
Yeah, in 1991, not many people had heard of the stock market. Nobody had heard of Harshad Mehta. Harshad Mehta became popular only in January, February of 1992. So I was pre-Harshad Mehta. So I jumped in when, India was about to default. India's forex reserves is $1 billion. Today, Sri Lanka has got $3 billion and we consider it as a dead country. Imagine we are having $1 billion, which is equivalent to 2 weeks of, our oil requirements. So that is, that time it was 25 rupees to the dollar, which means 2,500 crores was our reserves. Last quarter, I think TCS has done a 10,000 crore net profit. So just see the contrast. So everybody had given up, but I generally like contrarian bets. So I said, let me take a bet on India. And I jumped in. So those days, what happened was physical shares. And, when you go on the floor, you actually physically meet the buyer or seller. So you know who is a good buyer, who is a good seller, who will default, who is a short seller. So that was, a face to face. And there were a huge number of bears and bulls, and we used to fight. When it is like a fish market, but the market was only for 3 hours. And after the day is over, we sit down and have a cup of coffee. Lifelong friendships have been, we got lifelong friendships over a cup of coffee. Whether that guy is a bull or bear, at the end of the day, he was our friend. So that also made a lot of Madras Stock Exchange brokers not to apply for NSE, because they thought, how can you do anonymous trading when I don't know who the other guy is? What is the guarantee he won't default? Though the exchange from day one said that they'll take the counterparty risk, but that was then. So in Madras Stock Exchange was known as a cash market, so there was no carry forward. There was obviously there was no futures and options. We had something called Badla, which was there in Bombay, which was there in Delhi and Calcutta. So Badla was basically carrying forward your positions, and it was heavily in favor of bears. So that is why all those big traders those days were bears, including Mr. Jhunjhunwala. Late Jhunjhunwala was also a big bear. If you see in scam, a feature comes there where he says, I now want to become a bull. So there was only one bull that time, that was Harshad Mehta. Otherwise, generally people were bearish, and they used to make money off the Badla. Because if in Badla, when you as a bull take a position, at the end of the settlement, you are supposed to pay an interest rate to the opposite side, who's a bear. And that bear may not have stocks, but he will collect that interest. So interest could be about 2% per month. Sometimes it should go 4% per month. So all you need to do is to short sell some stock and keep quiet. And because markets are not going anywhere, you simply earned Badla every 14 days. Madras was a cash market. So which means there is no question of carrying forward 2 settlements per week. So you could not do trading, because you see the jobbers, as we call them, they give two-way quotes. Like they'll say 100, 105, which means you buy from them, they will buy from you at 100 and they'll sell it to at 105. So when you want to sell it to them, you will have to again give away 5 rupees difference. And when you buy 5 rupees, so 10 rupees gone plus your brokerage. 2% brokerage was the norm. So 12% is what you have to gain to trade. So it's impossible to make 12% in a trade in 2 days' time, because the third day is your settlement. So there is no way one could become a trader then. Swing trading was not heard of, because again, swing trading means you need to take delivery. You can't take a position. So that was what it was in 1991 to 95. No traders were there, all investors only. Then 96 onwards, 95, NSE went national. So then you had 5-day settlement. So you could do speculation during those 5 days. Then in 2001 is when the futures and options came. For stock futures and stock options came in 2001. Though in 98, 99, you had the index options, which nobody traded. So that was a different kind of trading. And then, of course, as to 2012 or something, Zerodha came. So brokerages fell, and that was a different phase. So in each of the phases, you had to adjust. And with God's grace, I adjusted. A lot of people could not, and they have not survived. They're much better than I am in understanding the markets. But, if you don't adjust, that is what Darwinian theory, only the fittest survive. I'm not the fittest, but I knew what was coming. And so the Madras Stock Exchange is closed, for instance. All the regional stock exchanges were closed. And they were the guys who were my brokers. I was sub-broker to them. Today, when I was running my NSE, they were my sub-broker. So we had turned full circle because they did not recognize a change. So that is what we have undergone over a period of time. The processes change. The kind of thinking will change. So F&O, today everybody does F&O. In 2001, when F&O came, nobody did it, or very few people did it. So today people do options. Very few people did options. They didn't know options in 2001, 2005, 2008. Very few people knew how to trade options. Today people are trading on options volatility, which I'll speak later. What are the dangers of that? Trading volatility. We used to not trade volatility. We used to only trade for the direction. So that was what our this one was in the 1991 to 2022. Yeah.
Right, sir. So, sir, if we talk about like the investing journey, everybody's journey is inspired by someone in the one form or other. So, if you can, tell us, like, is it like all self-learned, or you had a good company network, or someone which we say investment guru, or maybe a guide? How it had been for you?
Yeah. See, Prince, I come from a management background, so we were taught what mentoring was very important. So when I joined my first job, I looked for mentors. I had mentors in my organization, IMRB, and in O&M. My supervisors were my mentors. But when I came to the stock market, I looked around for mentors. Everybody laughed at me. What is this mentor? You cannot, why should we mentor you in, first of all? And what is mentorship itself? They didn't know. And I am desperately searching for a mentor for the last 30 plus years. I have not found one. Okay. People laugh at me when I tell them, boss, I need to be a mentor. First, they laughed at me on the definition. Now they laugh at me saying that I'm already 60. Why do I need a mentor? So my mentor, if anybody, is my wife, because we discuss ideas and based on that, we do investments or trading. So we didn't have, believe me, in 90s, there were no computers also. There was no internet, of course. There were no cell phones. So they came in 95, for instance. So even the books, for instance, I was a voracious reader of books. At one point of time in my library, I had about 300 books on markets, and I read every one of them once at least, some of them twice, maybe some of them 5 times. So I was really, so those days, somebody told me there is something called technical analysis. I didn't know what it was. So I went to somebody's computer and tried to find out some moving averages he showed me. This was in 1992. Computers were not available freely then. I bought a computer, and then there was no services available in India for technical analysis. Then somebody said there are some books written. Why don't we read those books? So I read 2 books. One was Robert Prechter's Elliott Wave Theory, and the other one was Maggie, Technical Analysis. So Maggie was the Bible. Those days, there were no candlesticks. It was only bar charts. So Maggie is an 800-page book, I think. But it's an absolutely Bible every technical analyst should read, but nobody will read it because it's very, very boring. But all what I learned was from there. I learned Elliott Wave in 1993. Again, we photocopied these books. Somebody coming from US used to photocopy the books, and we photocopied and photocopied and photocopied. So we didn't get these books during those days. So the desire to learn. So charting I used to do is I have to take graph paper, graph book, and actually chart Fibonacci number 34, 34. Somebody said every 34 days the market changes. So I used to take the closing price. There was no NSE, BSC, and chart that on chart paper. And that's how we learned, because we were desperate for learning. I remember one thing, we are a group of traders who are all interested in the market. And when we used to go to Tirupati, from Madras, Tirupati is 140 kilometers, everybody wants to go to Tirupati. And when we go to Tirupati, in our minivan of about 10, 12 people, we're only discussing market, only market. We are going to see God, but we are interested in market. It became so ridiculous that on one trip, that the guy who's there in the sanctum sanctorum, he shouted at one of them saying, "You please pray to God. What are you discussing something? We are discussing technical analysis in front of Balaji in the sanctum sanctorum." That was the kind of, what shall I say, passion was there. I don't see such passion now. Seriously, I'll tell you, because I go around talking to people, and people are not so passionate. Imagine, instead of seeing Balaji, we are talking of head and shoulder pattern or something like that. So that was then. So I'm a self-taught man, because I wanted, I didn't get it. I didn't get a guru. So today I mentor a lot of people. I'm hoping that they will turn out to be far, far superior to what I did, because I tell them my mistakes. I don't tell them about my successes. If you ask me successes, I will not talk to you about it. That is left to those guys who post those screenshots. Let them talk of their successes. I can talk to your failures, and a number of failures. I tell people I made 30,000 mistakes in my life, because I've done at least 60,000, approximately 60,000 trades in 35 years. So my track record is 60%. I could have wished that I had a mentor. Maybe it would have gone to 70%. That's all. 60 is the best. So I wish I had made less mistakes. So I am still looking for a mentor. If you find one, please send them to me.
Great, sir. Your journey has been quite great. So coming to another question, like, tell us about the process you follow and how it has evolved over a period of time. And if I were to ask, like, do you use any screens, or how exactly you generate ideas? Because currently, if we take example of Twitter, you see so many feeds, and even you talked about that screenshot thing. So there is so much of feed which definitely affects the whoever is reading those tweets and seeing those pics. So how it had been for you and how it has evolved, and also if you could walk us through, like, what is the segregation, how much for, I mean, your portfolio, if we were to ask, is into long term investing, and how much is into trading, and what's your approach exactly? It's conservative or aggressive, or a mix of both? Yeah, over to you, sir.
Yeah. See, basically, by default, we become what we become. In Madras Stock Exchange, there is no way I could become a trader. So if I started my journey in 82, between 82 and 1995, I could never become a trader, because there was no chance, because the brokerages were so high. I told you 12% is the break-even point. So after 95, we did trading, and I was a broker. So I had to also take care of portfolios. Those days, there was no PMS. So you managed portfolios, people trusted you. So we had all kinds of schemes. So I really didn't have any such proportion. See, we traded on what the customer wants. Somebody says, give me 10 stocks for long term, I give it to them. So I'm involved in that, because I also would have bought. Normally I have skin in the game. I don't sit down here and put some theories, and most people who talk of all these great theories, they themselves will not be traders. Mostly their income will come from seminars and webinars. I'm not in that. I may conduct a course, but that is a very different kind of course. But for me, without skin in the game, I won't talk. I should have had. If I don't have it, I'll tell people I don't have skin in the game. So I always had skin in the game, whether it's investing or trading. So mostly, till 2001, obviously there was no futures and options. So futures and options came. So again, I jumped in. I was a very regular trader in futures, options. So I do everything what one should do in the market. I'm generally an aggressive guy. Okay, I'm still aggressive at this age 60. Though my family members ask me to reduce my aggression. See, aggression comes from within. People become from aggression to passive when they lose huge amount of money. For me, it didn't matter whether I lost money, made money. My style is aggressive. What is aggressive is not necessarily that you start shouting or you start jumping. If you see me like any good trader of the past, you will never understand, you will never know whether I made money or not. Today, whether I've made money or lost money, you will never know. That is the way we trade. We'll never show what money we made. Certainly, we will talk about losses. We will not, give you a hint of emotion that today what my trading was. Every day I trade. Today also I've traded. I've taken positions, swing plus investment today also. I run a large family portfolio. So lots of rich uncles, daughter, a son-in-law, son-in-law's dad. So many people are there. I oversee that portfolio. So in that family portfolio, today I have done intraday trading, plus I have done swing trading. I've done a BTST. I'm holding Reliance because I'm hoping some announcement will come for Reliance. And I've also done for something for the budget. And I'm also looking for something for 2024. So all things I'm there. I'm never, one kind. Only thing I'm not doing now from September is options and futures. I'm out of it. I'll tell you the reasons later, but I'm not doing that. So in terms of process, for me, process is okay. In terms of diversification, see, it has changed over time. Typically, I don't like to hold more than 10 stocks, but today, across the family, I hold about 35 stocks on their behalf. I mean, in their demat accounts, in their trading accounts, but I oversee 35 stocks today. But when my daughter came to me, I told her only two stocks, ITC and S Bank. ITC 70%, S Bank 30%. A very concentrated portfolio, but very aggressive portfolio because I've done my homework. When I do my homework, it doesn't matter. So somebody said, how can you say you're a 30-year-old experienced guy and you're having only two stocks in your portfolio? So I said, I have only two daughters. So if I want to diversify, then I should have 10 daughters or 10 children, right? So you have two daughters, you take care of them well, and you hope everything goes well. That is how I look at it. The biggest of the investors, they don't have too many stocks in their portfolio. Warren Buffett, for instance, has got 90% in 10 stocks. And Warren Buffett has got a super large portfolio. But our mutual fund guys, they've got 90 stocks in their portfolio. So his 90% is there in 90% of his wealth is sitting in 10 stocks in equity. These guys are having 90 stocks spread across, and 90% of the mutual funds don't make money. So diversification is no use beyond 8, as the studies have shown. So it depends on where you want to diversify, what you want to diversify, and when you want to diversify. The thing, last year, April 2021, when I was very frustrated, I had a very bad time. Corona killed me almost. It killed me everything, business, everything it killed. So I was wondering what to do. So my daughter came up to me and told me that I have got some money. I'll do SIP. So let's do something. So I selected these two. So my process of selection was, first of all, there should be downside should be limited. That is most important for me. Upside can be anything. I don't have some targets. I know where it possibly can go. So I told her, ITC and this Yes Bank will go 4 times in 4 years. Some new slogan, because I'm an advertising guy. I believe in this all kinds of slogans. Some of them are absolutely stupid. So I told her that 4 times in 4 years. That means 210 we bought. So I told her you get 800 by 2025. And the same thing with this is 12 rupees. So I said you get close to 45 rupees in 2025. It looked ridiculous. I was, pilloried by people, trolled. People said you are a bogus guy. You are not got 30 years of experience. How can you only own 2 stocks and that to your daughters? Was put her hard-earned money. But touch wood, with God's grace, things have worked out. And I think things will work out if we know exactly why you are entering a particular stock. So that is what I did at that point of time. So go ahead with the next question, please.
So winners, I leave to you whether you wanna ask or not, answer or not. But yeah, let's talk about the losers or maybe the learnings throughout your journey of last 35 years.
So I would talk of lost opportunities. Let me not say losers. Lost opportunities. I'll give you 3 examples. It may take a little time. I hope you don't mind because I've prepared for this. I thought so many people are coming, so they should not be wasting their time listening to the same stories. So I thought, let me just give you different stories. So please listen to my stories. So in 1991 when I started, my first stock was India Cements. And India Cements I bought because my client said he has got inside information. Okay. You see how you start your career. Start with inside information. He said, boss, I got inside information. They'll come with rights issue. So let us buy on the curve, which means not even on the stock exchange. So we bought it on the curve, which is like your, this gray market. So we bought heavily at around 300, 310. And so when it did not go up, he simply dropped it onto me. He said, boss, I didn't tell you to buy these 1,000 shares. So 3 lakhs came onto my head. I didn't buy for myself, but it happened that one of my first and earliest investments as a professional was that a client refused to take delivery because there was no proof, there was no contract note. It was done outside the scope of the exchange. So I landed with some 1,000 shares. I didn't know what to do. It fell down to some 270. I nursed it. And when I got some more money, I selected a company called Shipping Credit and Investment Corporation of India, which is the subsidiary of ICICI. It was paying mainly for ships. So I thought India is growing, so infrastructure. So I jumped into SCICI. It was quoting about 25 rupees. People again laughed at me saying, "What is this SCICI?" But I know people in ICICI because ICICI was our neighbor. Incidentally, Chanda Kochar, she was our 2-year senior. And, we used to love her because she used to give us all projects. And we loved ICICI. A lot of my friends are in ICICI. They have very, very big posts, including Chanda, of course. So that was in 1985. So, I know ICICI, Bagul was there, and Bagul was a visionary. So I know ICICI, if it's starting SCICI. That's why I look at the story. So I said, we should pile on to SCICI. I piled on. Bought it at 25 rupees to 30 rupees. This was at 300 rupees. Then the Harshad Mehta Bull, of course, they bought many more stocks. But I just, story is like this, learning. In the Harshad Mehta bull run in February of 1992, this damn thing, India Cements went from 300 to 330. I held on, thinking I should not make a loss. My first bad trade, I didn't want to make a loss, so I made profit of 10%. So I sold it. If only I had invested, I had said I'll take a loss of 30 rupees, 270, I sell it and put all that money in SCICI, see what would have happened. What I bought SCICI at 25, I sold it 250 within 6 months. Not even 6 months, sorry, 4 months. That is somewhere in September to February. So how many months? It's 5 months. So that went as a 10 bagger. So the lesson is, you put some ego saying I have to win every stock, you will not, you lose a great opportunity. The second one was Shriram Transport Finance sometime in 2004. You see, Shriram Transport Finance was a lousy company at that point of time. In transport finance, you had Ashok Leyland, you had Sundaram, you had Cholamandalam. So in Madras itself. So you had this Shriram Transport Finance as the worst. 1 minute. Okay. Shriram Transport Finance is the worst. It was traded at 4 rupees or 5 rupees something. So somewhere in the early 2000s, Citibank took a 10% stake. And my partner, the person, I would say his partner, because all we were made partners. I was also made partner in that firm, in that broking firm. He called me up and said, Vijay, let's pile on to Shriram Transport Finance. So I said, why? He said, boss, don't you know I was the first employee of Shriram Transport Finance, the first ED of Shriram Transport Finance. I know what I built Shriram Transport Finance. I know what it is capable of. We needed capital. We didn't have capital. Now Citibank has come. If they're going to take 10% stake, then they'll bring capital. This stock is not a 6 rupee stock. So I called up all my clients. Wherever credit balance was there, I simply bought left, right, center. I bought. They didn't even know what that company was. I jumped and bought it at around 6 rupees, 8 rupees, 10 rupees, somewhere up to 10 rupees we bought. And lo and behold, within weeks, it went to 30, 40. And then we panicked because we said, how come God is so kind to us? How come God is going to give us 4 times? So I told all my clients, let's sell it off. So we bought fairly large quantity and spread across many clients. Okay. So about 10,000 clients at one time, spread across 4 towns, Bombay, Coimbatore, Bangalore, and Chennai. So you see, it was like a lottery for them. See, so we bought and then we felt happy that, we sold at 30 rupees, 35 rupees, 40 rupees. Then it went to 750 rupees, okay, within a short span of time. So that was an opportunity. We know the information. We know this company. The first executive director is sitting with me, and that damn fellow is also selling with me at 30 rupees. So he also panicked. So whatever knowledge you may have, whatever experience you may have, whatever. So without luck, lady luck is not there. God help you. So you must understand and you must pray to God that God help me to not, help me to manage my losses more than my profits. Profits will get taken care of. The third one was in Ashok Leyland in 2013, when you see Ashok Leyland was at 29 rupees was the 52-week high, and 18 rupees or something was the 1850 or something was the 52-week low. So I knew Ashok Leyland because we had done projects for Ashok Leyland, Madras-based company. I know people in the company, and I knew how badly it is performing. So I know that the MD had taken a 40% cut in his salary, and they were working 3 days a week. This was known. This was known in the market. And one day, because of frustration or something, they broke 1850. And the technical analyst will say, then you go short or then you cut your longs. So I started buying from 18, 17, 16. So I didn't know how much. I knew it was not worth 1850. It was worth much more than 1850, or maybe 45 rupees or 50 rupees. So I was looking for a 3-year time frame. This was September 3rd, 2013. So I again called up all my clients and emptied all their credit balances into Ashok Leyland wherever possible, 17, 16. So one of my big clients said, boss, you told me story of Shriram Transport Finance. So what is your target for Ashok Leyland? I told him it may go to 45 rupees, up to 50 rupees. 3 times it may go up to 15 rupees. It was 16 rupees. So approximately 50 rupees, 55 rupees in 3 years' time. So he said, fantastic. So we piled on and we bought left, right, center. Then from 17, it went to 16 and 15 and 14. And then I started getting crank calls. Those days, you see, in 2013, there was not much of Twitter, though Twitter was there, but no, everybody was very decent on Twitter during those days. I know I've been in Twitter since 2009. So I get calls in the midnight. They wake me up and say, boss, what a lousy stockbroker you are, what a lousy investor you are, and all that. And, I could not handle it. One small story, side stories, one of my mentors in IMRB called me and said, see, I got a rich uncle in Chennai who's retired. He's got some 5-6 crores. Why don't you go and meet him? So I went and met that gentleman, and he asked me, I believe you're a stockbroker. I believe you're an intelligent guy. I nodded my head. With my wife, I had gone. And he said, I want to put 50 lakhs in the market. Can you recommend any stock? So I told him, boss, I'll have any set of stocks. I said, I'll recommend only one stock. He said, but can't you diversify? I said, why should you diversify when you identify a good stock? So he said, which is that stock? So I told him Ashok Leyland. And then, till the time he was very kind and courteous and all that, he just stopped talking to me. And he escorted us out of the door and almost kicked me out. And then my wife, on the way home, she was also very silent. And I asked her, why are you so silent? She said, you are a lousy businessman. Why are you telling? We could have told him some Infosys or TCS or something. You could have told him you would have got some brokerage, 50 lakhs client. You're losing like that. So I told that client, sir, you wait for 3 years. Whatever you know, I know, the market knows that they're struggling. Ashok Leyland is a Hinduja company. It is a number 2 company making in HCVs, LCVs. It's an old company. I have handled that account of Ashok Leyland. I have done research for Ashok Leyland. I know what is the DNA of that company. Hinduja will not let it down. It won't go below par or something like that. So it went to some 14. And you see, I continuously got calls. Then you see, after some 7 months or 8 months, in early 14, when I think the market started turning because the BJP was supposed to come to power, this went up to 21. Every single client sold. Every single client. I begged them, don't sell, because I convinced you, wait for 3 years, you'll get 45 rupees, 50 rupees. 3 years' time, it went to 110 rupees. The damn thing went to 110 rupees. They cried, I cried. I almost committed suicide. Because you see, so much of information, so much of knowledge, so much of experience, so much of research, everything you do, and you are let down by people, whom you feel that they trusted you, but at the end, they just dropped you like that. So that is one thing. And finally, one story about, I don't know whether you can call it a winner or loser. So just this is one very interesting story. I had identified a stock called Vikas WSP in the year 2000. I know it was a lousy company, and so much so that the board of directors were shooting each other. I mean, so shooting with guns. Okay, and so I know Morgan Stanley had a huge position, and those times you had something called no delivery period, which means you can speculate for nearly 4 weeks. So at that time, the operators or whoever you call them should jack up the prices or drop the prices dramatically. I can tell many stories, but I'll stop with this one story. So I took a short position in Vikas WSP at around 450 or something like that. So I know that stock is worth 0. But you see, Morgan Stanley manipulated it and sold it at 450. And the first day of no delivery, I sold. It got upward circuit. 8% upward circuit was there. There was no circuit will get open because no futures and options. Then it went up 8%. I sold a little bit. It went up another 8%. I sold a little bit. Then it went up another 8%. I sold. So it continuously got upward circuit. And I thought it will break. I didn't have a proper strategy, excepting I know that 450 itself is too high price. So finally, my price might have been 800, and I got trapped. And then I got a letter from NSE saying that your MTM loss is 54 lakhs. Those days, there was hardly any risk management because the exchange itself used not do risk management. So they sent us a letter. And so please bring in 54 lakhs additional margin. So I somehow managed 54 lakhs and sent it across. Unfortunately, my father-in-law passed away. So I had to rush to Bangalore. So I can't get out of this position because its lock is not opening. I'm short and NSE is penalizing me. And my father-in-law, there's a tragedy in the family. So I went there, and from there, I called up my office and I asked them, what is the price now? So they said at 1200 and something it was. So I said, my God, 1200, okay, whatever the loss is, we'll bear it. And here I have to go to the crematorium. So I sold it. He said that he bought it. He said the circuit is open and trading is going on. So I said, first let's cut that. And we cut it, and they went to the crematorium, came back, and I asked him. He said, huge volume, sir, and the price is down by 10% from where you cut. At 1220, if I cut, 1210 it was. I said, put the position back all full. He said, are you sure? Because we are already selling at a 10 rupee loss. We have covered at a 400 rupee loss. They're selling at a 10 rupee loss. I said, see, if it is trading with such huge volume and it's trading below the weighted average price, then this stock has to go to zero. So it is only that the operators or UTI, whoever it is, have got out of this position. That is why it's so exciting. That's why it's so fearful, because everybody will now look for a 1500 target, and the people who are shorted, they are no longer there, they're dead. So I said, let me rise from that, and gave it back in the full quantity. Then it got downward circuit that day, downward circuit. I covered it at 400 and some 400 odd. This one, I made a profit of some 2.5 or some 3 lakhs. Some profit I made, a reasonably good profit, and I was hailed as a hero. But the kind of crisis I went through was unimaginable. But you have to have some process. The process there was accepting. I could not do anything because you see, it was getting upward circuit. I didn't have a trailing stop loss. Nothing I could do. But I had money. I could raise money. But also, most important for me was, I realized that huge volume trading below VWAP, and that's it. That story is over. Is what I knew, and that's how that's a lesson. I'm hoping that I don't want anybody to do or undergo what I underwent. It was a triple tragedy actually. I was losing. NSE was behind me, and my father-in-law was no more. So yet, you need to keep your mind cool and say, let's have your process ready. My process was clear that this is going somewhere. So that was the 3 or 4 stories.
Right, sir. So the question would be more on, like you talked about the concentration in your portfolio or the bets you are taking. I know the process you had followed, or maybe you must be following, is proper and back tested with data and all the research you do. But again, don't you see any black swan event if that comes? That would be that could bring a bigger jolt to your portfolio and maybe the hard work of years. And again, in last 35 years, how had been your investing and placement during black swan events, or maybe big market corrections per se?
Yeah, that's a very good question. See, there are many black swan events since 1991. 1992, Harshad Mehta's, outing, that is, expose by Sucheta Dalal, was a black swan event. But you see, in 1992, I'll tell you some of the events, black swan events, where I was. I was positioned long going into April 1992. But I had my daughter's first birthday. So, and also I looked at the market. I saw everybody jumping around. Stocks were jumping 10%, 15%. There are no circuits those days. So the summer stocks were jumping 40% and all that. So I knew this is madness. So I got out almost at the peak. In April 2nd or something, I sold. April 25th, the market topped out, but there was a holiday. That's how Harshad Mehta got caught. So I knew it's dangerous. I told people, get out. It's better to get out. And I got out at least, made sufficient money. I could buy. I celebrated my daughter's first anniversary in a grand manner. I bought a Maruti air conditioned. Those days, if you own a Maruti air conditioned car, 800 cc. There was no 1000 cc also. There was no Zen. So you become like talk of the town because those days only Ambassador, Fiat was there and Standard Herald. My bosses all owned at best a Fiat, old Fiat, second-hand Fiat. And here I've got a brand new Maruti air conditioned. So I thought I was the king of the world. So I was on the right side then. The dot-com crash, again, I was on the right side because again I saw the same kind of greed. And people who had made huge amounts of money, I know they were not willing to sell. So I decided to short sell left, right, center, and that I got benefit in a dot-com crash, which was a black swan. And then in 2004, you see, again, I was positioned 10 days before the election. I knew that the BJP will lose because I can do a special session on elections and markets. Markets, that's why I put the number one risk for Indian markets is political uncertainty. No analyst talks of political uncertainty. Every time, elections are there, the market will tell you what is likely to happen every single time. So in 2004, Atal Bihari Vajpayee was invincible. He actually preponed the elections. Elections supposed to be held in September 2004. He said, no, we'll hold it in March, April. So 6 months before he held the elections. Elections supposed to be held in October. So they held it in March, April. And we all thought they will win because there was no opposition. Sonia Gandhi was disgraced. Manmohan Singh could win any election. So he was a Rajya Sabha member. So there was nothing. Congress to mit gaya tha. So there was nothing happening. So everything was in favor of Mr. Vajpayee, and we were very bullish. So I kept on buying, and I saw that the market was coming down. Since January 2004, it was continuously coming down. Then I said something has changed. The market is always right. The market knows that there's going to be a change in regime. The the NDTV survey, those times they used to do, they had said 375 seats for BJP. 375 seats. And it was acceptable because you see, there was no opposition. And yet the market was coming down. Then I know that the market is telling you that it will not get 375, BJP may lose. So I changed from long to short at somewhere in late April. And when the results came, and then you had a double down circuit. So I was sitting with short position on that day. So God's grace. Then on demonetization, I was sitting short because I could see the pattern. I can't tell you exactly. See, I can't explain. I can tell you always, no, the Fibonacci number happened, or this got cut there, golden ratio, death across. I can tell all those things. But I see the screen. I'm a screen reader. I see the screen. I'm afraid means, I will try to rectify. If I don't rectify, I lose all the time. I also follow cycles. I follow history. And generally, market repeats cycles and histories. So the demonetization, I was prepared for it. I made money there. 2020 COVID, I was very prepared for it. I told people in December 2019 that COVID will attack India. Be careful because the bank Nifty had peaked out on December 2019. The Nifty peaked out only in January 20th of 2020. COVID came to us only in March. But the market sensed that. See, market sensed disasters, including 9/11. The market peaked out. The airline stocks started falling from August 31st in US. They did a investigation, but they could not find as to this one. But somebody knew. Otherwise, airline stocks can't simply start falling 15 days before the 9/11 happened. But nothing came out of the investigation. Every major event is known by the market. It is known by somebody. You can call them operators. You can call them anything. That will tell you. It will tell you. So it was very clear that COVID is going to hit us. I in fact went to Bombay. I told a very big broker. I told him, sell everything. He laughed at me and he chased me off. Because I'm some small guy who's nobody knows me and all that. Anyway, I could not help. I could not help people because it collapsed. Then where I got screwed was in 2009 election results. You see, 2008 was a very bad year for a lot of people. 2008, incidentally, was the second best year of my career because I shorted through 2008 because of some experience of 2000. And in 2009, there was global financial crisis. I'd gone to Singapore on Orchard Road. There was nobody. You see, then I said, boss, there is something wrong. Orchard Road in Singapore, there is nobody in the evening. So, you see, I came back. I started short selling. Indian market in April. I said, anyway, we'll have a hung parliament. UPA 2 will not come. And it was a general consensus. But the prices were going up. Yet I said, this time the market will be wrong. I said, this time the market will be wrong. The market is going up. I should short sell it. I built huge amount of shorts before the results on Friday. And when the Saturday results came, SGX Nifty showed 2000 point up on Nifty. And on Monday, it opened upward gap, locked. It opened. 15 minutes later, it got upward lock. So I don't know what to tell you. My pants, underpants, everything went away that day. Because you see, I had fought against the trend. I had fought against the market. So I really lost. I didn't know what to do because you see, it is long. I can't even cover it. Of course, I covered, I made some, after that, did some jobbing, adjustment, or whatever you may call it. But that's gone. And it is a shameful event, I think, for me, not because I lost money, it's because I did not, I mean, my process was wrong. My process was wrong. In 99, it was another thing, time my process was wrong. We had Kargil war. You see, in 1992, April 2nd, April 25th, the Sensex was 4,540 or something. It almost did a double top in 1994. Between 1992 and 1999, 7 years, it never crossed 4,500 effectively. It crossed for a few days in September 2000, in 1994, but that is just because of no delivery period, it crossed. That generally we should not take it as serious. So I thought 5 years it has not crossed. There is no way it will cross 4,500. So therefore, let me go short because Vajpayee has lost the no confidence motion in April. There is a Kargil war has happened and okay, the war is over. But generally things are not good. The economy is not doing well. So, and also we had sanctions. 1998, we had, we had the nuclear test we did and America had blacklisted us. So we had sanctions against us. UPA had gone bust. So things were very gloomy. So I said, Maro re, short Maro. So I kept on shorting till October 5th when results came. BJP won with significant majority and the Sensex crossed 4,500 for the first time to reach 5,000. It crossed 5,000. I lost heavily. Again, I went against the market process. I went by events. I should have seen how the market reacts to events. And market was telling us, I am going up. Vajpayee is winning. Do not depend on, do not depend on some other information which is available. So that is another time when Black Swan happened and I got caught on the wrong side. So yeah, these are the Black Swan events.
Great, sir. Great. So the roller coaster ride had been great, sir. So let me ask you how you identify trends. How do you identify trend and basically what you look for in your investment, say fundamentally and technically. How if I were to ask how you start and how you end up investing, the whole thing, if you would like to explain, sir.
Yeah. See, I am basically a very aggressive guy, but I look at value. I do not look at growth stocks. Never. So if you tell me you're going to a stock which is 30 PE, I'm going to say, sorry, I don't want to look there. I may miss that opportunity. A Titan, for instance, I'll never buy. My friend is the MD of that company. Okay. Like a Lever, I'll not buy. Again, my friend and classmate is the chairman of Lever. Okay. I never bought Infosys not because my friend and classmate was the CEO till now he's retired. But I have people in places, but I don't buy those stocks because most of those people are there managing companies which have got high PE. That apart, I will never buy something where there is what they call BOP stocks. Buy at any price. I will not buy because I don't know what the downside is. And when you don't know the downside, because a 70 PE stock can come to 50 PE and still be expensive. So I'm not in that game. I'm in a value game. I look at what is my downside. Now, when I bought even S Bank, which looked stupid for others, not for me, I saw what is my downside. So I also looked at what fundamentals of S Bank. And fundamentals I look always at. So therefore you will have PEG ratio, growth, who is the management, what is their performance, what is the dividend. So this is hard work. Okay, technicals very easy. You draw line, two lines, this side, that side, and all that. And then you make buy above this, sell below this, and all that. I also look at technical. I spend all my life in technicals, but I also spend all my life in fundamentals. And so fundamentals is first, technicals later. But most important of all of them is a story. Without a story, I will not buy a stock. What is the story? I'll just give an example on RBL Bank, for instance. Okay, RBL Bank recently, I got many stories. I'll just give one example. RBL Bank. I'm not recommending this RBL Bank. I'm telling you what my process is. So RBL Bank, you see, recently it got into very serious trouble. Right, last year it got into trouble. I think where did that RBL Bank? I mean, if, I'll just see where it came down from some 650 or something to below 100. It came to some 70 rupees. It came. Now I have dealt in RBL Bank at 650 rupees. My clients have bought when I was a broker a couple of years ago, 3 years ago, and they had met the management. They were very convinced that it is worthwhile buying RBL Bank, and I had bought for them. And suddenly RBL Bank, because of some crisis, it came down. It was coming down, and suddenly it fell. I think in 20, it started falling. In fact, in 19 itself. But recently, it just took a dive to from some 160, 170. It fell down to about 70s. Okay, and it was a write-off and a scam and all that. Second S Bank is what they said. So I know RBL Bank. People in RBL Bank, in the sense, I've dealt with them and all that. Those days, that is when it was 600, 700, when it was considered a second HDFC Bank. From a second HDFC Bank, it became a second S Bank. Okay, that's how the mood changed. Of course, mood has to change because it fell from 115 to around 80 rupees very quickly. So I was just, I kept in my mind every day. You were hearing only on CNBC what fraud they did. And then they said that they're cleaning up the books and they want to appoint the new MD. So the market was expecting some MD from abroad, I think. And so they announced the name of this MD. And immediately the market sold off again because they didn't like the name of that MD. Who was this MD? This guy was a guy from, public sector bank. I remember this name because this guy was the previous MD of IOB. So I called up my friend who was a general manager in IOB who retired. So I just wanted to know, because I want to know the management. So I called him up and I said, boss, what do you think of this guy who's now come to RBL? His job by RBI has been given free hand for next 3 years to clean up the books with the NPS. NPS are huge. He wants to clean up the books. So what do you think? And anyway, NPS have already been written off. It is just that if there is something, and basically RBI wanted him to see that no more NPS will come. Basically, they wanted a fire engine guy, a fireman, to put out the fire in RBL Bank, which was burning. So I called him up. He abused this gentleman. He abused the MD. So I told him, why are you abusing him? I don't want to say what abuses he did or what abuses said, but he abused him. So I asked him, why are you abusing him? He said, see, boss, I'm in Chennai. IOB is in Chennai. This fellow is sitting in from somewhere he has come, sitting on my head. Every Sunday morning, he calls all of us to the head office in Mount Road. Because you see, there in Chennai, the IOB, all the senior officers stay in one colony. So this guy knows, this MD knows who is there, who is not there. So nobody can simply escape. So he calls all of those people, GM, DGMs, AGMs, all of them. And morning, some 10 o'clock, he starts his meeting, Sunday morning. And goes up late night, maybe it goes up to 10 or 10:30. So 12-hour meetings. And he takes each of the GM and comes to the DGM and comes to AGM and draws a grid and says which banks, what NPAs, who's following up, who is the branch manager, what happened on a weekly basis. They are supposed to report him. And he made their life miserable. Miserable means miserable. IOB is a bank which is unionized. So they tried their best and got him out because he lived, breathed only NPAs. How to reduce NPAs? How to make IOB an NPA-free bank? You see, so he harassed them day in and day out. So they didn't like it because on Sundays, their Sundays are ruined. They don't have any Sunday plans. They can't do anything. And their whole life. And next day, Monday morning, he comes to their cabin and says, what have you done? Yesterday, I told you this. So he harasses them day in and day out to reduce the NPAs or get back, what NPAs have been, what they have declared NPAs to write back, not write off. So I told him, boss, he's the best man for RBL. No, he is worst man for you people because he's harassing you. So what is his job? His job is to reduce NPAs. So will he not do that in RBL? Then he thought over and he said, yeah, that is correct. Yes, he may do a good job in RBL because RBI has given him a free hand. So it may be worth. So I saw it was about 100 rupees. So I waited. I said, okay, let me see whether it crosses some 100, and I put some 107, because you see, when it had come down, it had broken from, I think, 114, 113, it broke down directly to 102. And so I thought anything above 102, 104, I will buy. I put a stop loss and bought at 106, 107. And I told my relatives to buy. They were all unconvinced. They said, boss, RBL fraud bank, you're telling me will collapse, and 70 rupees it was, 80 rupees it was. This PSU fellow has come, he will destroy this bank and all. I said, boss, this is the right guy. This is the right guy. I have checked his background. I know who he is. Okay, I don't met him, but everybody's cursing him. So a person being cursed like this means he is coming with a demonic zeal. He is going to bring out this bank out of its doldrums. So let's take a chance. I said 12% downside. We'll put a stop loss and ride it. And to our good luck, teachers fund came in. They also did some analysis like that. They bought it at 110, huge quantity. Then I knew, okay, no problem. Now we are on a good wicket. And today I still hold that RBL bank, and I don't intend to sell it right now. So that is how I just, that is a story. Without a story, in ITC, there was a story. I try to convince people, see, ITC, 9 years back in 2013, Nifty was 5,300. In 2021, Nifty is 18,600. ITC in 2013, 250. In 2021, 220, including dividends, maybe 240, 250. So no price change for 9 years. And ITC is a profit-making, dividend-paying company, and it is not affected by any budget. So why can't we buy ITC regularly? One day, this damn thing will get up. This is like Kumbhakarna. It is sitting. Okay. So people said, oh, no, what is this ITC? It has not gone up. Our people are making memes, so they'll make meme of you also. So I said, okay, you make meme. I told them, look at Hindustan Lever. Hindustan Lever in 2001 and 2012. For 10, 12 years, it was lying low. It is a fabulous company, profit-making, dividend-paying, and it had the best of the people because Hindustan Lever is opposite our college. So we love Hindustan Lever and we love ICICI. And lots of my friends were MDs and CEOs and chairman, whatever. So I said, I know Hindustan Lever, they were so poor, but in 2012 it was 350 rupees. In 2020, 8 years later, it was 3,000 rupees. From 250, 300 rupees, it has gone to 3,000, 10 bagger in 10 years or 8 years. Whereas for the previous 8, 9 years, it was lying low. So I said, ITC also is doing exactly like Hindustan Lever. It's a far superior company to Lever. Lever doesn't make cigarettes, ITC makes. Lever doesn't, have a paper company, ITC has. Lever doesn't have a software company, ITC has. Lever doesn't have hotels, ITC has. The book you read, the cover of that book is made by ITC. If you take a matchstick, home lights, ITC. A puja item, ITC. Atta, ITC. Software, the fastest growing mid-cap software company. But they're not convinced. Well, they're a cigarette company. Cigarette company is one part. So I told them, okay, you buy it for the FD. It is giving 5.25 dividend yield. It is a good FD. Buy it like an FD. So there was a story. There was 5 stories in ITC. There are 5 companies. Now it's not only cigarette, hotel, FMCG, paper, and software, and your green revolution. Any government, including this government, will give preference to green, farmers. ITC will be the number 1. So that is the story. In S Bank, you see, S Bank was 450 rupees. I handled, I know that it is a fraud bank at that time. When it fell to 8 rupees, 10 rupees, I bought something. It got stuck in that 2023 March only they'll remove. So I saw who came into S Bank. S Bank came, SBI took over S Bank. 30% is held by SBI. Another 10, 12%, 50% is held by institutions. So S Bank is not a private sector bank. It is a public sector bank held by SBI and LIC. So how you can say S Bank is that S Bank? That S Bank is different from this S Bank. And the guy who has come, the MD who has come, is a guy who slowly and steadily brought it to profits. So for 6 quarters, you have made profits. Now it is 10, 12 quarters, you have made profit. So I said, why you should not buy S Bank at 12 rupees? People said, no, ROC, ROE, equity, bloating, all that. And I said, it's a turnaround script. Don't look at those. So what is the target? I said, in 1 year, it will go to 20 rupees. From 12 rupees to 20 rupees is damn good. So I said, in 4 years, it will go to 45 rupees. At least it can go to 20 rupees at least in 2 years' time. So I said, we'll pile on. And we piled on to S Bank. So that story is now what has happened. And this fellows came, this Carlyle came. So who is Carlyle? is our this guy, the previous HDFC Bank MD is sitting in Carlisle. So one board seat is going to Carlisle. What will happen if that gentleman comes on the board? What do you think will happen to the stock? Will people look at equity size? They will simply say it's the next HDFC Bank. Aditya Puri is sitting in Carlisle. They have bought at 12 rupee 84 paise equity and at 13 rupee 86 paise and 14.74 convertible. 14.74 they are willing to pay for S Bank when S Bank is available at 15 rupees 50 paise. So they are smart guys. They know Aditya Puri will take out blood from stone. And you are saying that Aditya Puri is wrong. So what is your downside? I said, boss, your downside is 14,784. You put just 60 paise as your downside, 1520. It was something, 60, 70 paise is your downside. And then you'll see what happens. Then it went to 24. Can we buy at 24? I said, boss, you sell partly at least 24. I not bought. So if you're not bought, then what can I tell you? See, you have to have a story. Without story, I won't buy. I've got so many stories to tell you. What all my 35 scripts, I've got stories. Without story, no buying.
Story is fine, sir, but I have a contention and a question to say, like, where does the story comes to you? Is there any what we say any filters or any screeners that it pop up on your screen and you start digging in or find out the story behind any security, or how exactly you do it?
Stories don't come as screeners. Stories come from people like you and me. When I go to spaces, I simply sit down and listen. Especially I go to spaces where the view is contradictory. See, I'm a full bull. Okay. I go to only bearish spaces. I listen to bearish people. I try to find out what is going on in their mind. Why are they speaking like that? Stories come like that. See, RBL story came from where? The MD changed. I knew that guy is an IOB guy. You see, in 2008, for instance, I was a Rotary Club president. So we had your Rotary conferences there. In the annual conference, we invited Mani Shankar Iyer. And this was before the budget. On February 8th or something, we invited him. The budget was that time was in February end. So Mani Shankar Iyer came and said that, you see, we have to look for farmers. Farmers' elevation should happen. So we should consider farmers as primacy in our budget. That's all he said. In the next session was a big fund manager. I don't want to name him. And he said, we are now in a bull market. This is only a correction. This is 2008 February I'm talking of, when the market had started its downward journey. So I got up and said, sir, you were sitting in the audience. I was sitting in the front row. This guy was sitting adjacent to me. Mani Shankar Iyer just finished speaking. I said, boss, Mani Shankar Iyer is telling you that in this budget, the primacy will be to farmers, which means a farmer loan may be waived. If it is going to be waived, fiscal deficit will go on the roof. The market will crash after budget, don't you think? No, he says, no, it is India is a shining story. Everybody will come to India. Budget, they announced farmers waiver. You look at what happened on March 1st onwards in the Nifty and Bank Nifty. That was what happened. Now what is happening? Clearly, the government is telling us, boss, we are going to give primacy to railways. We are giving you primacy to infrastructure. So what should you do? Should you not look at railway stocks? So I said, boss, bahad mein jaye wo lever ya ITC, whatever, chodo. Abhi from now to budget, I'm going to look only at Atmanirbhar. Because Atmanirbhar, every day the Prime Minister is telling, the ministers are telling, which means the focus on this budget has to be on Atmanirbhar. That is the chance you take. Of course, you may say, no, it may not come. But in market, you have probabilities. So the story is here. For me, I said, boss, Atmanirbhar. I'm doing a special clubhouse session tomorrow where I'll discuss stocks, but I'm not discussing stocks here, but I'm just telling you. So for me, Atmanirbhar. So I told people, just go for Atmanirbhar. I've been telling them for the last 3-4 months, PSU, the ugly ducklings, get into them. The guys who nobody likes, the PSU banks nobody likes, the railway stocks nobody likes, the infrastructure nobody likes. Those are the stocks one should go. So this is the story I come from there. This is my story. Atmanirbhar is my story for 2023.
All right, sir. So I have seen like you made predictions, or maybe we can say probabilistic bets, right? So what's the rationale behind your predictions? And if I were to ask, like, how had been the year 2022 as far as your predictions are concerned, and how they have fared in this last 1 year? And maybe going forward from here, how you assume or maybe predict how the year 2023 is going to be.
Yeah, thanks. I think probably we are coming to the end of the interview. Probably people are bored, I suppose, listening to me. But anyway, let's finish it with this. See, First of all, one should not make predictions like that because nobody knows fully. Okay, everybody knows a little bit. You can't say nobody knows anything. We all know something when we do probable bets. So we take it. I mean, we should make prediction because that is where then you know which path to take. See, last year I was very clear that the loose money policies will lead to higher inflation. Very clearly, inflation is going up in July, August, September of 2021. I took up on clubhouses. I told them a bear market is coming. Please don't be bullish. Please respect the market forces. Please respect the natural forces. I gave enough statistics to show that we are going to get into high inflation or stagflation in the year 2022. I gave data. I wrote threads. I participated in spaces, clubhouse. Everybody was very bullish last year. Do you remember that? But so I have been wrong many times, okay? But I'm telling you, sometimes I'm right. And when I'm right, I argue passionately. So I told them you'll get hyperinflation. People said inflation is transitory. I said the Fed is a useless organization since I've followed Fed since 1980s. I have no hesitation in telling you they will not get a driver's job in my company. They will not get. I'll tell you why also. Okay. So somebody said they are PhDs and all that. And who are you? You're nobody. Very common sense. Common sense is not available with Fed. Or they may have common sense, but they are probably controlled by somebody. Whatever it is, they made public statements saying inflation is transitory. When the drivers of inflation, like there is no Ukraine war. You look at lumber, for instance, is a very important thing for housing. Housing is big in US. Lumber prices were just shooting up last year. So you know it's going to come. It's just a matter of time. And you had slowly foodstuff prices were going up. Salaries were being increased. People were speculating and buying all fancy stuff through this crypto and all that. So it is going to come. And then and so I said 2022 will certainly see even RBI increasing rates. RBI also did a QE. So I said certainly it will increase interest rates. Certainly that is there. I put a thread on that. One can see it. So I made quite a few predictions. I thought Indian market will fall between 20 and 30% from the all-time high. So approximately 25% is what I thought. Nifty went down only 18%. Bank Nifty went 23%. But I also said whenever Nifty and Bank Nifty fall, the mid cap and small cap will fall 1.5 times. That means I thought mid cap and small cap will fall 40% from the highs. In June 22, when I did my research, out of the 1,800 stocks, 50%, there's more than 900 stocks had fallen 50%. That is the worst bear market you can think of. 50% of the stocks falling 50%. And then in January, people said, let's hide in IT. I said, IT probably is dropping out. At that time, IT index was 38,500. And I said, if you want to find out when the bear market will bottom, first IT has to bottom. Only then you can be sure that it's a bull market. So that was one. BAP stocks will do damage because it is very clear people are buying all the platform stocks like Zomato and all that rubbish. Then I said rupee will have to, because rupee gently comes down every year about 5%. I thought it would be a little higher. Crypto I thought will collapse because people had gone mad. And then, but I also said the most important thing for me in that prediction was that 2022 will be the best year for a value investor. I am a value investor. I knew I was waiting for 2022. And when it came, I jumped. I thought by Deepavali it will bottom out. When I saw the big fall in May and green shoots in March itself, then I know that I can't predict that Deepavali only it will bottom out. So I started becoming bullish from mid of May, and I continued to add and kept on telling people that this is the time. This will probably be the bull market like 2003 to 2007. It is a fundamentally led bull market. Once in 40 years, once in 20 years, you'll get. In the 40 years of my life, 35, 40 years, the first fundamentally led bull market was the 2003 to 2007. The second is this. So this is that caliber. This is not a liquidity bull market. People are thinking it is, people are thinking liquidity should drive. That is, foreign liquidity should drive this market. This is a different kind of bull market. The only other parallel I can think is 2003 to 2007. Now, in 2023, as we go along, you see all of this based on study. I study global market. I study everything. I listen to people with different kinds of opinion. I have no ego listening to a PR Sundar or a Rohit Srivastava or a Sushil Kedia or any of those guys who come. I may not agree with their views, but I will listen to them. because that is the only way I can improve upon myself. If I'm saying, boss, if I'm bullish, I only want to listen to bullish views, then I'm sorry that we are going to go into big mess. So I think like this, 2023 will be very interesting year, probably more interesting than 2022. The first thing is the first quarter will be very good for India. I expect a panic buying after the budget. I'm expecting a blockbuster budget. I'm thinking people do not know, they're underestimating Nirmala Sitharaman. This time it will be candle of candles. Okay. So mother of all candles I'm expecting. Now you can laugh at me on February 1st, or you can just appreciate that, I also was able to think. I have solid data for that. I think we are in a very good wicket in terms of economy. Recently, the food subsidy they have done, they're saving 165,000 crores. So that will be available for developmental schemes. They are already looking forward to infrastructure, rural development, and railways. So I think the focus will be on that. Generally, the last budget before election will be a blockbuster budget, or they will at least concentrate on people whom they want to win. Middle class has not got anything. This time it will be the middle class. It will be the investors' budget. I'm fairly certain. Okay, I don't have any inside information. Till now, no budget proposal has been ever leaked since 1947. So I don't think this government, of all the governments, will leak any proposal. So whatever you hear on TV is all bogus. No budget proposals ever leaked. So believe me when I say this. So therefore, I am speculating on that first quarter will be very good. Panic buying will happen after budget, I think so. Now everybody is challenging it. Let it go to 18.6, 18.5 or something. I think you should, you'll be shocked, I think so, when you see those numbers which come after the budget. The numbers of the budget as well as the market's reaction to that. So I'm extraordinarily bullish. The most bullish I've been in a very, very long time for the budget. Inflation, I feel, will collapse. People are talking of high inflation next year. I think inflation will collapse. Already disinflation is happening. Mine is a lone voice when I say disinflation, which means inflation is coming down slowly, but suddenly it will collapse by February, March, because you see the things which drive the inflation globally also are coming down. Commodities have collapsed, housing has collapsed, lumber has collapsed, metals are dying, and then local inflation also is slowly and steadily coming down. So there is no doubt in my mind you will have inflation which will collapse, and you will have probably deflation, which the Fed Reserve will not know how to do it, what to do with that. But India will be in a good spot. I believe strongly that we will have a euphoric market. And euphoric, what is euphoric market? Last year, at 18,600, it was euphoria. So my definition of euphoria is if the PE ratio of the Nifty stocks crosses 26, 27, 28, it is euphoria. Last year at 18,600, the PE ratio was 28.2. Today, as we speak, the PE ratio is 21.8. So I feel we may see a 26 to 28 kind of PE. You do the calculation for what the Nifty will be. I'm not going to give a target, but I will look for an euphoria anywhere between 26 to 28 PE. So you do the calculation. If at this level 21.8 means what would be at 26 and 28. And globally, I feel UK will be the worst affected. I won't be surprised if the PM gets changed, because UK is in very bad shape in whatever industry leaders I look at and the fundamentals. And it is managed by a Goldman Sachs guy. People may be proud that he's Indian origin and all that. Finally, he's a moneyed guy. And Goldman Sachs, people, when they lead a country, they always destroy that country. Draghi led Italy and he destroyed it. This gentleman will also put into trouble. But Britishers are very smart. They are likely to throw him out before next Christmas. This is my thinking. As far as global stocks are concerned, Tesla, I think, will fall another 50, 60, 70%. It's right now, whatever, 100. I think it may go down to some 40 or something. And then in terms of stock sectors, all ugly ducklings will shine. That is, which nobody is looking at it. No, everybody's thinking they're useless stocks. They will shine, like PSUs, PSEs, infrastructure, maybe real estate, maybe some in pharma. The ugly ducklings, people who are not concentrated. I doubt the IT, metal, platform, all those, I don't think they will do. This is what my prediction is. Let's see where it comes. I put it in writing. I'll put it tomorrow. Let's match it. I'll also put last year's prediction and show you what I did, what has happened. Thanks. Now I think probably we come to the end of people's patience. Yeah. Thanks, Prince.
Yeah, sir. We have one speaker with us. So, farmers,
I have a question, sir.
yeah, go ahead.
Sir, at first, a very nice uh, talk has been shared by you, sir. The question that I have is basically, if you will look at the employment status of our country, as well as if we will look at small scale industries, and especially employment in small scale industries are falling like anything. A lot of companies are giving layoff to employees. So do you think that fundamentals of India is still strong at a time when nowadays our focus is shifting from savings to enjoyment and purchasing expensive items? So at one side our savings are falling, at another side our debts are increasing, and along with that interest rates are also high. So still the fundamental story of India is still bullish, or there are some dents in it?
Yeah, thanks, Hurmas. Hurmas, is it? Or what is the name,
Yes,
sir?
Hormuz
Hurmas.
Patel. Yes,
Hurmas Patel. Thank you.
yes,
You raised a very, very good point. You see, India, in my analysis, is having a K-shaped recovery. That is, if you understand a K-shaped recovery, it's an economic term. Basically, the K is the top part of the K is going up. The bottom part of the K is coming down. That is how the K-shaped recovery is. So people like us who are interested in stock market, corporates, all of us middle class, upper middle class, we are enjoying and so we are the top part of the K. The bottom part of the K, unfortunately, are the poor, the unemployed youth, the rural areas. I go to rural areas. I can see the problems. I can see the unemployment. I can see small scale industries being thrown out by demonetization. Or you take the case of GST, and you take of policies in COVID, for instance. So I'm from rural Karnataka. Okay, so my roots are there. So I never forget those roots. And my friends, my daughter, they stay in small towns. So when I visit there, I just go around. I know it's a pathetic state. I feel very sad that while we talk of 20,000 Nifty, they are not able to get meals, daily meals. It is very sad. So now, as an Indian, I'm not very proud. Okay, to be in a country where one side people are doing what is called revenge buying, revenge holiday, revenge blah blah blah, and the other side you are not even bothered about what your driver is doing or a maid is doing and all that. So it hurts. It hurts me badly. I'll tell you that. However, I have to look at the stock market, because the stock market is by people who are doing this revenge spending, revenge buying. They are investing. The stock market is a corporate body. So the government, the industry, or the expo. I mean the other countries, they are looking at investing in this country. The benefit will go to few people only. So it's a sad thing, but that is the way we have to accept that fact. Now, I used to be almost like a communist. I used to challenge people. I said, what kind of country we are in? We are only talking of money, money, money. Whereas we should be looking at the upliftment of the poor and the downtrodden. But you see, when you come to stock market, you will have to behave like, how to capitalize here. So whether we like it or like, some people said, why are you buying ITC? It's very cigarette. People are going to die because of that. But if I want to think that, okay, of course, I mean, I never buy hospitals, for instance. I don't buy liquor stocks. Not that I have anything against them, but it's just that hospitals especially I don't buy. Anyway, so the thing is, you feel bad, but then you want to make money. You're in the stock market, you want ideas. Then unfortunately, you will have to be blind to that part of the country. I'm really, it hurts. I'm telling you again and again, because I come from a rural background. My friends are all farmers who are marginal farmers. They're not even, when I talked of some chief executives, I also have friends, classmates who are marginal farmers in the drought hit districts of the Karnataka, which is Bidar, Bijapur, Gulbarga, Raichur. These are all backward. I come from that area. I visit them. So it's like that. So it is bad, but market is market.
But sir, actually, do you think that fundamental is still strong? That is my main point.
Yes, fundamental for market is strong. See, now you are saying interest rates are going up, right?
For entire country, fundamental for India. Fundamentals
Yeah,
for
yeah.
India, sir, I'm asking.
Yeah. No. I'm telling you. Fundamentals can never be 100% right. Never. In no year, you name 1 year, I will tell you what problems were there in India that time. Anything from 1991, you tell me. I'll answer for you. Okay. So fundamentals for corporate or fundamentals for urban India, they are generally good. They're not the best. They're generally good. Now we talk of interest rates. See, interest rates, you see Fed interest rates, we are talking of some 4.25. We are thinking it's too high. Do you know what Fed interest rates were there in December of 2006? It was 5.25. Indian interest rates were also higher than what they are today, about 8 or something like that, 8 or 9 or something like that. So Indian interest rates were high, and we had a great bull market between 2003 to 2007. Continuously, Fed was raising interest rates. India was raising interest rates because inflation was going up. So if you go on those fundamentals, then what happens is, no, you will never be able to invest in the stock market. It is very difficult. In fact, I used to wonder why people are buying stocks when the interest rates are going up. It made no sense, economic sense to me, but that is what it was. And Fed was raising interest rate left, right, center. In fact, till August 2007, Fed had an interest rate of 5.25. August 2007, they almost made a new high. This Dow Jones and Nasdaq and this one made their yearly highs around that time. India made a new high in January 2008. So India had a new high, all-time high in 2004, 5, 6, 7, 8. So we kept on making new highs despite we are having problems in all those years. We had a bad coalition. We had communists taking charge of the country, but the market went up. So we have got lots of fundamentals. See, if take the credit growth. Credit growth has gone up regularly. It's going up. You look at taxes. You look at GST. GST is going up every month. You look at corporate tax is going up. It's record corporate tax. I told you about the 1,65,000 crore saving coming through this free food. They have offered free food for only 5 kgs per head. So when you go deep down and read, then you know the government, the system, let me not say government, the system is taking care to help the rich. It is not helping the middle class and poor. So we are saddled with so many taxes. So we are going to cry. This budget, I think there will be rationalization of taxes. We had so many problems in the past also. Some rationalization happened in various times. So while you look at one side, fundamentals, from one side, they may not be that good. You have potholes in the road, but you also have national highways which are pothole free. India is a land of, what they say, contradictions. So it will fool the pessimists as well as optimists. The optimists will get fooled because they will see they will forget to see the potholes. The pessimists will get fooled because they'll see only potholes and not see the smooth roads. So that is how India is. It's a land of contradictions. I have realized this after many years, and I also after making much losses. If I look at only the let's say the real India, I will never invest in the stock market. I'll never invest.
So, sir, we are yet to talk about the exit strategy you follow. What's your sell criteria? Is it purely on the basis of technicals, or maybe how exactly you go about it? And if you are keeping the stop loss, how exactly you are trailing it or maybe keeping it? What are the percentage criteria or maybe anything on the basis of technicals you follow?
Yeah, that's a good question. See, my trading stop loss is a hard 12%. 12% from my purchase price. That is my hard. And out of the 35, I've invested in my portfolio. When I say I means, it's not I, it is let's say what I oversee. So we did about 50, 55 stocks. Out of that, we have taken profits where, we feel they like auto ancillaries. I was very bullish. Autos, I was very bullish. I'm not there in autos, not there in auto ancillaries. Because I saw the chart of the auto index. Auto index bottomed out in March. After that, it's struggling from September. So I got out of it somewhere in October. So I look at the top down. That is, I look at the index, the sectoral index, and then come down to the stock. So I was very bullish then on pharma, much part. I've now moved out of that. I was bullish on private sector banks, moved out of it. I have been getting in and getting out of IT and pharma with a stop loss of 12%. 12% is hard stop loss. And then I monitor it on a daily basis, minute to minute. And then I may take some profits when there is euphoria, like and also event based. I'll give an example. December, for instance, I know for a fact that December is not the year when, not the month. December is usually the best month in the year, but December is not the worst month in a year. I also know December is a month where it will give one jhatka. Every year in December, you will get one jhatka. So I was prepared for the jhatka which came. A lot of people were not prepared, so I had sold quite a bit before the jhatka came around December 15th. If you go back today, a lot of people on TV. In fact, I was shocked when one person said he's got 30 years of experience and he has never seen a December like this. He's never seen a December like this, which is completely, if you're an analyst, people should see. For instance, last year December, from the it dropped 7% from the highs, 7%, and from there it went up 12% from the lows. From December high to December low, a 7% drop. It went up 12%. In December 2020, on a single day, it dropped 4.7%. On a single day, December 21st of 2020, it dropped 4.7. From there, it rose up 12% in the next 1 month. In December 19, it dropped 2.5%, went up to 5% from the low. December 18, it fell 5.5% and went up 6%. Today, we have dropped 5.8% from high to low, the recent fall. So we are not, this is a normal December. So I have prepared for it. So of course, I couldn't buy exactly on Friday. I bought from Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday. This 10 days I bought because I don't know which is the bottom, but I know in December you will get a jhatka. So I try to sell like that also. I not only sell by rate, I sell by date. So now what I've done is, the next step I've done is that I will wait till February 1st. Only on February 1st, I'll review the portfolio. Now, I could be right, there could be euphoria, or I could be wrong, that it could be a lousy budget. Then if it's a lousy budget, anyway, the 12% stop loss is there. Now, trailing, generally, I'm not a great trailer kind of a person for trailing stop loss. I look at, the mood in the market. See, I see the screen. I'm a screen reader. Whenever I see and I feel, this is not so great. Like Yes Bank, I sold 50% to some 22.75. I didn't sell at 24.5. But I bought back that full 50% at 17.75 recently when it fell down. So now people you may say, why did you not sell full? So now I felt there is a 50% chance it may go up also. So whatever you may have, whatever experience, you take a decision based on some thinking there. The formula is simple. 12% is one. And then after that, everything else follows. That is all qualitative. Date, rate, budget, favorite stock, probabilities, all that is later. But 12% is the hard stop. And they have been triggered. 5-6 stocks have triggered the 12%. LIC is a classic example. I bought 2 times, it got triggered. Third time also it got triggered at 4% itself. I got out. Now again I got into LIC day first day. But I bought from first day. I thought it's a great company. I bought this, PPL, that Piramal fellows. I bought. Somebody said it is not somebody. Research said that 160 is the bottom. I bought, and stop loss trigger. Now again I bought. So, but I know that there is a story in Piramal. There is a story in LIC. LIC doesn't deserve this rate. I know. That's what I think. Sorry. So I am not. I don't hesitate. Just because my stop loss triggered, it doesn't mean that I forget the stop. I keep it on my radar. When I saw day first some news regarding insurance, so I just bought it. I bought it yesterday, I think. Yesterday or day first, I don't remember because I bought a lot of stocks in the last 4 days. So that's how I do.
Great. And guys, as a part of disclaimer, any names taken during the conversation are purely for illustrations. Please do not act on them. These are purely for educational purposes. No buy sell or no intention to influence any of the attendees today. And you guys must be enjoying this so engrossing and interesting session. So you guys can reciprocate by checking the handle of our guest, and if you like mine also, I try to bring as many eminent people who are very experienced and eager to share their knowledge to this forum. So you can reciprocate by following us, which gives us the necessary motivation so as to share more. So Sanik sir, we have one speaker with us. Mr. Parimal, you can unmute and ask your question.
So thank you, Prince ji. Namaste, Sanik ji. I just had a simple question. Am I audible?
Yeah,
yes,
go
sir,
ahead.
you are audible, sir.
Okay, so Sanik ji, one small question. since we are in a bull market, can we expect some correction to buy soon? I mean, unless and until there is some correction, or rather, my question, I would reframe it. What would be the right time to enter? Is it the right time now, or you buy in parts and pieces, or wait for the 1st of February, or you expect some bottoming out to be happening in the month of Jan? So this is my question, Sainik ji.
Thank you very much, sir. That's a very, very good question. See, as I told you, I was expecting a Jhatka in December. It came, so I jumped and bought. Okay, so I was expecting it can go up to 17.6. So I thought originally it may come to 17.8 to 18.2 in that region. So I kept money ready for that. Now you may say, why you did not sell everything? I didn't want to sell because I don't know whether a Jhatka will come this December, but high probability it will come. So I should be prepared with money. I also should be prepared that it may not come because I don't dictate the market. So I bought into it. I'm fully invested. As we speak, I'm fully invested. I'm begging people to give me more money. My relatives, my daughters, my son-in-law, his father. I'm begging all of them. If they give me more money, I'm buying tomorrow. I'm buying Friday. I'm buying Monday. I'm buying. I'm not waiting till budget. In fact, budget, I'm waiting to sell. I'm not waiting to buy because my visualization, which can be completely wrong. I've been wrong. I told you 50% of the time I've been wrong, or at least, yeah, most of the time, 50% of the time I've been wrong. So if I'm wrong 50% of the time and 30,000 mistakes I've made in trading, I could make a mistake even in budget also. But I have studied this enough for me to take a risk with my son-in-law's father. I made him, get out of, he's a public sector employee. He's a 74-year-old gentleman. I told him, boss, don't put in FD, put in stocks. I told him dividend yield stocks. This was sometime in June, July. I told him you will get dividend yield of 8%, 10%. That's better than an FD. And you may get some capital appreciation. So Coal India, REC, PFC, all these stocks I bought. See, again, these are not recommendation. I'm just telling you, I don't care because you see, I'm not anyway recommending. I'm just telling you the story behind it. So tomorrow, for instance, if I get money, I will buy stocks. I will hesitate to buy anything. If it crosses what is it? Now we are where we are. We're at 17.8, above 18.5 and all. I'll get scared to buy. I like to buy when there is decline. There was decline. I normally buy stocks. I don't bother much about index, but still index is important. I study it because index will tell us what is the mood in the market. Right now the mood is scary. The mood is people are thinking it's a bear market rally. People are saying that there will be a big correction, big crash to 15,000 and then only market will go up. They are thinking that will not make a new high. That is the mood. And I love such moods if I'm a bull. So I respect the big guys who are telling, people who are much smarter than me, strong, much more wealthier than me, much having 50,000 followers. I have not even have 10,000 followers on Twitter. But for me, I do my homework. I am not managing public money. I'm managing family money, which is more dangerous because public money, we can always give reasons like Putin did that or Biden did that or something. Anyway, family money, when I go to a family function, if the NAV is down, those buggers are not going to listen to me. They're going to say, boss, you said you're a very expert and all that. What nonsense you are. You useless guy. Should have put in mutual fund or put in a post office or something, they'll say. So humiliation is greater when you manage family money. So with conviction, I'm telling you, I put my money where my mouth is. I have skin in the game and I'm fully invested and I'm not looking for a correction. A correction may come. If it comes, if I have money, I will buy. Otherwise, I'll wait till February 1st. After February 1st, I'll review it either way.
So thanks, Sainik ji. I mean, it's gracious of you to admit that. I mean, not many people admit they make 50% of the time mistakes. So I mean, that itself gives confidence to a lot of your listeners here. I mean, boss, I mean, kuch to sahi bol raha hai banda ye. So thank you so much. So I mean, it's time to buy. I mean, any sector specific? Any sector specific thing?
Parimal ji, why I keep on hammering this 50%, reason, there are quite a few reasons. One reason is, there is a difference between experts and experienced people. I can never become an expert in my life. Why? Because an expert will never make mistakes. Have you ever seen on TV people saying I made a mistake? Any analyst?
No one.
So that's why they're called experts. People like me are experienced. So I was also called on TV. I was to be a TV commentator many years ago, 20 years ago. So on TV, I used to get into trouble like this only. Because I'll tell whatever I think. I said I made a mistake, or this is wrong, or that is thing. People say, boss, don't tell that and all. Please, we must behave properly. You must wear a tie and all. I said, boss, I can't wear a tie. Yeah, I'll come like that only. I'll wear a blazer. I'll come neatly dressed, but I will speak my mind. Because then, see, most people, the so-called experts, think that we're all fools. We don't know anything. Okay. So those guys, you see their portfolios, they've all underperformed. So I can buy an ETF and we do better than them. No. So I've been in this market. I've seen all those guys. Many of those guys, I know them personally. So I don't want to speak anything about them personally. But I'm just telling you, an expert will never make mistakes. So he's an expert. I can never be an expert because I'm an experienced guy and make mistakes. More important than the 50% of the time I made mistakes is I have survived. What I'm trying to tell people is you can make mistakes and still survive. Don't think if you made a mistake, I'm unfit for the market. No, you can learn from your mistakes. An example is here. I tell people whenever I go and teach in colleges or anywhere, wherever people call me, I go. There are two people sitting, I'll go and I'll tell them, do not worry. My whole life, whatever I want, my daughter's marriage, my flat, my car, my brother's marriage, everything I've connected only through stock market. Only through stock market. So you don't have to be greedy. You can. Sectors, I told you, Atmanirbhar. I'm buying Atmanirbhar. I'm not giving recommendation. I'm buying Atmanirbhar sectors. So you please take it from me. When you do your due diligence, so you find out what are Atmanirbhar sectors. I gave you a hint. I told you railways.
I follow you. Just one small question. I mean, on a philosophical side, one quality which made you survive all this apart from humility?
I work very hard, sir. I work very hard. See, I am not an intelligent guy, okay? Even in my family, 3 brothers, I'm the least intelligent. But I'll beat all of them because I work hard. In college, engineering, I hated that subject. Okay, I dropped 2 semesters. But in the final year, I got 72%. Okay. Why? Because I said, buddy, I will outwork you. Even in Bajaj, I was in the top 20 in the university. Because I'll outwork them. That's only, I only know one thing, I will outwork you. Whatever your intelligence may be. Intelligence is not important. If you want in life, if you want to survive, you have to outwork the other guy. That's all you need to do. In anything, in IMRB where I was there, if somebody does, very bright guys, I was probably the dumbest guy, because IMRB takes only MBAs from IIM Ahmedabad, Bajaj and IMC and all the place. Those guys will do 5 projects per year. I will do 20 projects per year. So there is no comparison between me and them. They will go home at 6 o'clock. I will go home at 12 o'clock in the night. I don't care. But I will do those. I have to beat them. That's the only way I can beat them. I can't beat them on intelligence. I can't speak good English. I can't, I'm not a handsome guy. I can't use jargon. I can't do all that. But performance will finally pay. That's exactly how I do, sir. That is the humility in market. I always tell people, either you are humble or you get humiliated. If you think you're bigger than the market will keep on kicking you regularly. You have to be humble. For me, the screen is like my temple. Screen is like my temple. Every day, I will think I'm getting into a temple when I get into my room. I don't have any euphoria. I don't have any depression because I want a temple and I come out of the temple. I've done my job. That's all I've done. End of the day, sometimes you get into serious problems. Sometimes you get into, successes come. I was telling somebody, see, today my strike rate is 70%. Okay, 70% it is. Normally my best strike rate is 60%. They said, my God, 70%, very great and all. I told them at one time, in Corona time, my strike rate was 100%. They said, my God, 100%. I said, 100% of time I made losses, 100%. Between April of 2020 and April of 2021, month on month, I made losses. 100% track record. So in April 2021, I sat down and said, my God, what is this? If somebody says I'm having 30 years of experience and you are making 12 months stop or 14 months or whatever, continuous losses, what is wrong with you? So I said, am I fit? Am I not fit? What have I done wrong? I've done the same process. So I went back and said, what is wrong? So sat down, thought about it, did more and more research. And today, with God's grace, I'm able to do 70%. Maybe a time will come and I will become 30% profit, 30% only. But I've seen 100% loss. Very few people would have seen 100% loss.
So, sir, the story or maybe the fundamentals which we just talked about, be it the budget story or the election year. So, is the smart money movement noticeable on the charts which you see, or how exactly is it?
Smart money is there. See, I thought the market has bottomed down on May 12th. Okay. But I looked at the charts. The chart said the May 12th, around that time, the Nifty had come and made a new low. March low, after that May low. June was the final low as of now. So Nifty was, I think, 15,600, 700 that time. So I went back to my charts. I said, Bank Nifty has not made a new low in May. Auto index has not made a new low in May. FMCG index has not made a new low in May. All these three indices have made a new low in March. They never made a low after that. Nifty made a new low in June. I always look at Bank Nifty for me to understand the mood of the market and mood of the operators or smart money. Bank Nifty will tell you where the market is going, not Nifty. I will give two examples. In December 2019, I was following the corona in China. People were saying, why are you wasting time in corona in China in December 2019? Indians are all, immune. Okay. So I remember an incident with an international cricketer from Tamil Nadu who was a captain of Indian cricket team. I'll not name him. You can guess. He was also my client. We were sitting in the airport lounge on January 29th. I told him, boss, biggest problem you will face is corona. He started laughing at me. He said, boss, you're simply trying to scare me. It's all media. I told him, just now the market has peaked out, Nifty has peaked out. So in the Bank Nifty peaked out in December 2019. Similarly, in 2002, mid or late 2002, Bank Nifty peaked out. Last year, Bank Nifty, peaked out. I mean, it showed, not so good strength in February 16th itself. You go and see HDFC Bank Nifty. From there, they didn't participate in the run. Last minute, they participated. Then, when the last minute they participate just for the final pull up in October, then the top has been reached. See, there is no such formula, okay? These are my observations. So I'll put more emphasis on Bank Nifty. And I know smart people are buying. It's very clear. Just look at it. I always say something called a third force. We look at FII and DII. FII is useless, the data now, because FIIs have been constantly selling from April of 2021. They have sold the maximum in the history. So what is the use of looking at FII data? People say FIIs will come in January and all that. FIIs may sell next year. They're already selling for 1.5 years. So what is the new thing they're going to sell? So for me, the market has made FII data irrelevant for the last 18 months. Then look at DII. Many times you'll see FII, DII almost, matching. That is, they sell this one. But the market would have either gone up or gone down. Now, why, for instance, on Friday, both the institutional buyers, but yet the market came down. Why? Because that is the third force, the leveraged force, which also includes smart money. Now, what is this third force? The third force is your PMS, AIF, high net worth individuals, small cases, corporate treasuries. Then corporate treasuries, these are at least 5 I can straight away remember, and they do it yourself investors. Now, these guys are a huge component. See, today the AIFs and PMS is growing at a very fast pace. I have data somewhere, I don't have it right away, but they are a significant component. Where do you see that data on a daily basis? You don't see that. They are the people who move the market. The leveraged guys move the market. The smart money moves the market. The smart money, as I told you, could be leveraged, could be ultra high net worth individuals, could be in PMS, and could be in AIF or corporate treasuries. Reliance, Bajaj Auto, they have huge corporate treasuries. So those are the guys who move the market. But people are only seeing the FII data. FII data is irrelevant. When I tell people, hey, how do you know that it's irrelevant? I have seen FIIs before. I was there before FIIs. I know people in the FII desk. I know how they operate. Data is available. If data is telling you, boss, don't look at me. Now, if you go and study FII data, I also read FII data. I read every data I read. But the importance you give is important. What is necessary? It's not necessary to give importance to FI. You have to give the importance to the difference between FI and DI and see what the price movement is. That people don't do.
Right, sir. The learner can, yeah.
Yeah, thank you. Good evening, Mr. Vijay. I heard you talk about ugly ducklings. Could you please share any valuation framework you have for them? And how much margin of safety do you see baked in, considering most are trading beyond their median valuation metrics? Thank you.
So my ugly ducklings are stocks which nobody cares. They might have been great, but nobody cares. Like a Coal India, or like hold on, please. These are stocks which I have bought. Okay, Coal India, REC, or RBL Bank, or S Bank. I told you, ITC, SBI. Okay, these are some stocks. Okay, now all of these stocks will have some fundamentals. They have some story. So they would not be overvalued. Now you may say S Bank is overvalued. Let's leave that aside. Let's throw S Bank out. Public sector banks, PSEs, most of them are undervalued. Nobody wants to look at it. Railway stocks, BHEL. Okay, so there are so many such stocks. These are stocks which I have bought. I'm not saying you should buy because I bought it much earlier. So those are having. I don't look at, as I told you, 30 PE means danger for me. I look at PEG. I look at price by book value. The price book value for banks, for instance, if they're 0.5, I love them. 0.7, I love them less. 1 and above, and for PSU, I don't touch them. So SBI is above that, but SBI is SBI. So SBI is a completely different case. I'm talking of the second run PSU banks. Like that, every other take refineries. So look at the enterprise value. See, there are many factors which you need to consider. So none of the stocks which I own will be the so-called BOP stocks. None of them will. They'll all be value stocks, and nobody likes value stocks. So therefore, they are ugly ducklings. But they will give you, some will give dividend yield. Coal India gave me very good dividend yield. REC will give good dividend yield. So in worst case, ITC gave good dividend yield. So in worst case, I'm getting value. So I'm not in the growth category at all. So this is my style. And my style has been there from when I was 30 years also and when I'm 60 years also. People say, no, at 30 years you can be aggressive. Aggressiveness doesn't mean that you run and jump into the well. That is not aggressiveness. Aggressiveness means you must run fast and run away from the well. So I want to be like that. Some people may say, no, we'll run and jump into the well and come out of the well. That is okay. I know swimming, but I don't want to do that. I want to run away from the well and run fast.
Right.
Yes, sir. I finished.
Any follow-up, or shall we move on to next question?
Thank you. That was it for me.
Okay, thanks for your question. So, Sainik sir, like we should talk about the zero-sum game, and especially the beginners in the market. What should be their ideal approach to trading and say futures and options? What's your view on that?
I'll tell you a story. Okay, I'm going to bore you with stories, but that is how hopefully some people see. In 2001, the futures and options came into India in big time. Okay, now nobody knew what futures and options was. Before that, one had to take this test, which is NISM now, and it was NCFM. So we took the test actually in 98 because the brokers were supposed to take first before the clients or somebody takes test. So we took in 98 when nobody knew anything. So I am a reader. So I got 94% in the derivatives segment. 94% means only 6 mistakes I made, and that was negative marks. So then I thought I'm king at derivatives, right? So when we got a license for derivatives, so I jumped, and I know at that time the books which told me that the writers always make money, or writers make money 70% of the time. So I said, then why should I be a buyer of options? Let me be a writer of options. So at that time, markets were sideways. In 2001, you had the parliament attack. The general mood was very bearish. See, you may not understand this because, those days were very different. Very few people, volumes were very low and all that. So nobody knew what futures and options was. Even the brokers who passed the exam, they would have 60% pass. People got 61, 62 by mugging up something and somehow managed. So I decided that let me sell out of the money option because that is safe. So I started selling out of the money option December. So because it's sideways, I made the full premium. January, full premium. February, full premium. Then I said, boss, if you sell out of the money option, you're making only less money because premium is less out of the money. So then let me go to ATM. So I went to ATM in March, made money. April, made money. May, June. Then I said, boss, ATM, you'll get little more. Why can't I go to ITM? So because it's sideways market. And we were supposed to fight a war with Pakistan in May of 2002. Everything was very bleak. So I said, okay, June, in the money, profit. Because what used to happen then was, even if there was no weekly option, there was only monthly option. So every time, I used to make money every month. Sometime before the second MD, that is the Ravi Narayan, unfortunately, who was in jail, he had come to address the brokers in Madras. So he called all the brokers and he said, see, it's nearly a year since we started F&O. So what's been your experience? Everybody kept quiet because they're not done F&O. Because their confusion was very basic. Sir, if I am bearish, okay, I can sell. I sell. But if I am bearish, why I should buy? That is why I should buy put option. Buy means it should be bullish. It had gone to that basic level. So the brokers of the National Stock Exchange did not know these basics. You will not believe it, but this is truth. So like a fool, I got up and said, sir, it's so easy to make money in the stock market. Then everybody was blinking. I said, how come you are making money and we don't even know what a buy put means? We are thinking buy put means it is bullish. Because buy, no. So I told them, I'll teach you. And like a fool, a greater fool, I taught them. That see, this is a sideways market. Don't have to worry. Premiums, people are not calculating Black-Scholes method. They don't know. They're simply putting some premium. Simply hammer it and take money. Itna aasan hai. So they made money. They followed me. September, they made money. October, they made money. November, when you make money for nearly a year, you become overconfident. And I became overconfident. So I said, but in the money, let's go deeper in the money. Because more premium. I sold left, right, center. November, it went up mid-month. Again, I sold. So, third week, again I sold. November closed on the Nifty, November 2002. You can check the charts. I think nearly 10% above from, low to high. I lost 70% of my profit in just 1 month. Just 1 month. And I have got 94% in F&O. I just lost it. And it is humiliating, not because of the loss. I just don't bother too much about the loss. Neither do I bother about the profit. The humiliating thing was I taught those fools to do this futures and option by only telling them to sell call options, and they would have lost much more because you see, they started and immediately 1 month they would have made money. Second month their pants would have gone because the first month they would have thought, oh, itna aasan hai to sell karo. So that is what brought a lot of people's downfall. So since then I've been doing. Now you see, I stopped doing options recently. Why did I stop? Because I'm not able to understand this market. See, when I'm not able to understand the market, no, I don't fight. You see, I feel that today there are so many people who are conducting webinars and seminars and teaching you to trade volatility. That is the most difficult thing in options. Trading volatility. They're not trading direction. They're trading volatility. So they're having some strategies. And everybody wants to learn. So I tell people, see, in the Indian cricket team, playing India players, either you take IPL or you take one day, T20 or test, you may have about 300 players who play this top level. So you are looking at them, you are looking at the Surya Kumar Yadav making those shots and thinking, boss, hum bhi Surya Kumar Yadav kyun nahi ban sakte? Hum bhi Virat Kohli kyun nahi ban sakte? Of course, there are people who become Virat Kohlis, and Virat Kohli has become Virat Kohli after so much of struggle. Surya Kumar Yadav or even Sachin Tendulkar was genius. So many players are playing some 300, 400, whatever, 500. Or Ranji Trophy, take 2,000 people. In the entire country, 2,000 people are at the top class. And all of us are there only watching that match. You see? So, how can we think that we are in their class? To get into their class, we have to work hard. I cannot go, and Kohli can't come and teach me in a day. or in a week or in a month and ask me to play, and I will go and play. Kohli would have spent 10 years or 15 years to reach where he is, and even he is not sure. The first ball also he can become out. So we believe that if Kohli teaches us, we will become great cricketers. So that is the problem which people face. There are many trainers who will come around and troll me tomorrow, and I don't care because I know I keep my book open. For instance, on my Telegram channel, every Monday I put my trades online at the time I take cash market trades. So you can check my track record. I don't have any hesitation. When I make a loss, I write I made a loss. So I would have loved to see those trainers who claim that they make huge amount of money in options, apart from showing me end of the day screenshots, which I know, everyone knows now, that you can manipulate. So whom are you fooling? And the sad part is people are willing to get fooled. So if people are sleeping, I can wake them up. If they are trying to sleep, how I can wake them up? I can't wake them up because they will go there. So when I tell people with passion, I tell, please look at it. A person who has traded so many years is now saying that this is beyond his comprehension, means there must be a message. See, I have some idols. Okay. Warren Buffett is one, value investing. Then I have Vic Niederhofer. You must read about Vic Niederhofer. He is one of those really greatest, I would say one of the greatest traders. He was in George Soros' team. For 20 years, he had a 30% ROI. He is one of those fearless traders. There is a book called Education of Speculator. So Victor Niederhofer, he did that, and George Soros sent his son to train under Victor Niederhofer. That is the kind of caliber. In 1997, in the Asian crisis, he took options bets on the S&P, thinking that S&P will go up. So he sold put options. S&P tanked. He blew up his account. A guy with a track record of that magnitude, he tried to play the volatility game. He went bust. Then he tried, I think in 2000, dot-com boom, went bust. Subsequently, he reopened and he was the best trader or trading firm for some few years. He's that good. He's that good. But when you get into options, he failed. So when Victor Niederhofer cannot succeed, after having succeeded of having an enviable track record where George Soros sent his son, what about Vijay Sainik? So I have to think, either I have to go deep and find out and understand. Maybe my understanding is poor. Maybe I'll have to spend time. Then I thought, why should I waste my time in trying to understand something where my nerves are always, I'm nervous all the time. There is a bull market here telling me, you buy this Sainik, you will make 25% in a year. In a bull market, you can hope to make 25% in a year. In a bear market, you can hope to make 10%. Overall average, you can make 15%. So the bull market is inviting me. So why I should waste my time getting into options, trying to, what will I get at the end of every day? I have to, worry about it, which Dow Jones will do what, or SGX will do. I don't care. I don't care, because when I buy my stock, what difference does it make Dow Jones fall 200 points or fall 1,000 points? And my stocks will go like that. I have shown my track record. I've made ugly duckling portfolio. Some big technical analyst who talks of options, he told me your technical analysis is equal to KG level, kindergarten level. So I dedicated one portfolio itself to him. I told him, okay, boss, kindergarten portfolio, bolke, I will make one portfolio and show you. And people have followed that portfolio and made money. And when I told him this, he said, Banchut. So I said, boss, you can't use words like Banchut to me. I'm also at your age only. So he blocked me. There are a lot of people. One person said, you see, you are against options, you are against things, you are bullish, you should be bearish in this market. The whole country is going to dogs. So he blocked me. He called me, I'm a chimpanzee. Somebody else called me, I'm a mental patient. Why? Because I am challenging their ideals. I can challenge all these buggers who are putting these things, and I want to say, okay, let's trade online. Okay, real time. Then we will know. I have already told you I'm 50% loss. You are saying you're 100% profit. Let's do a online real-time challenge. And nobody's accepting. Nobody will accept. They can't because they don't trade. They are only making money off. You heard a recent one lady gave 1 crore to somebody for this one. She only wrote about it. I'm not taking her name also, but I'm just telling you. 1 crore. You are saying you are the instructor and you're going and giving it to somebody to trade in options. So what is it you are trying to do? You're trying to make quick money. You yourself have saying that other people should trade based on your, your training, and you lose money. You lost 70 lakhs or something. There's a big crisis. There's a big controversy going on. People might have seen that. When we don't know, when we can't do it, it's better to be humble and say, boss, ye nahi ho sakta hai mere se. For 21 years, I have traded in options. At 2022, I am not able to understand because people are now trading volatility on VIX, which is a theoretical construct. VIX is not traded in the US. VIX is traded. So everybody says VIX is 15, 450. Arey Baba, that's all a theoretical construct. You can manipulate VIX in India. In US, you can't because VIX is traded there. In India, it is not traded. You don't know that. And you say, no, VIX has gone here. So for me, VIX is meaningless because it is a manipulatable instrument. So I don't want to go into options. I'm begging people, if you want to go in option, okay, maybe you're much better than I am. Maybe you're much luckier. Maybe you've got a good mentor. It's okay. I'm not saying you don't go. I myself have gone in option so many years. No. So how I can say you don't go? It's like saying I'm drinking all the time. I'm a teetotaler, but saying I'm drinking for 20 years, you don't drink now. You also drink, have fun. Maybe you may enjoy. I'm not enjoying options. At this point of time, I'm scared. And moreover, there's a bull market. In a bull market, I don't want to waste my time in trying to short. I've not shorted a single share since May 12th. And I was known as a short seller, as a person who actually, took a class for some high net worth individuals and fund managers who do long short as to how to short in the market. I was a very well-known short seller. 80% of my trades will be shorts. Today, I have not short sold a single share since May 12th. I have not short sold, and I don't think I'll short sell till February 1st. After that, we'll see.
Great, sir. We appreciate the honesty and transparency on your part. So, sir, we'll be wrapping it up for today. It was really, really insightful and truthful from your end. We really like the conversation. So, before we close, any concluding remarks and how the broader market participants should place themselves so as to avail the opportunity or maybe which the market is throwing to us in the year 2023.
Yeah, thanks, Prince. See, I'm very passionate because I have seen life to some extent. I've made mistakes. I've hopefully learned from mistakes. I want you people who are listening to me, who have given me your time, which I'm humble because, you need not come and listen. You need not waste your time on a evening. You could have gone for a movie. You could have done anything. You come. Thank you for that. Please remember one thing. Do not fear. This market is like a river. You need to carry a bucket which you can carry it after you fill the water. This is a perennial river, like a Ganga. You take the bucket, don't take a big bucket because you may not be able to carry the water. The water will spill and you will get worried about the water spilling. Sometimes the water will completely spill on you, you will get wet. Please carry a bucket appropriate to your carrying capability, which means your positioning should be just sufficient. In that bucket, do not fill the bucket. That means you do not take all the positions at one time. Take half a bucket, 3/4 of a bucket. Over a period of time, you will end up, increasing the volume of the water in the bucket. But please remember, this is a perennial river. Nobody should scare you. There are spaces after spaces who sit day and night and talk of numbers which are amazing. 15,000, 12,000, 7,000. Arey Baba, I have traded in Nifty at 1,000. I have seen Nifty below 1,000. There is a reason why it is below 1,000. There is a reason why it is 2,200. There is a reason why it is going to 7,500 or 15,000, 12,000, 18,000. Tell me the reason. No. Tell me the reason. I'm telling you that we are sitting at 21.8 PE, and last year people were talking index will go to 20,000 at 18,600. That time you were jumping and buying at 28 PE. So why can't I hope that from 21.8 PE it will go to 23 PE? It is, you see on TV, the smart guys, so-called guys who wear suits and big fund managers and all that. They continuously tell you that India is overvalued. I'm saying, what is the basis of your overvaluation? If your basis of overvaluation is PE ratio, that's the fundamental basis. Tell me where is the PE today? No, in China PE is low. In Brazil PE is. Arey Baba, how can you compare apples with oranges? You compare this year's PE with last year's PE. This year, 2022, is the worst year globally. Indian corporate sector in the Nifty 50 has grown their EPS by 27%, which is one of the highest in many years, if not decades. 27%. That is why at 18,600, the PE is 22, whereas at 18,600 last year, the PE was 28. In the worst year, you've grown like this. Just imagine if we get a good year, or if we get a moderately worst year next year, what do you think will happen to the market? Today, people are so scared because the big guys are scaring you. A lady came from US, that lady manages $11 billion. She says for the next decade, India is going to suffer. Arey Baba, how do you know? On March 7th of 2020, if somebody would have told you that index will go to 10,000, because that time it was 7,500, you would have laughed at that person. Today, if you say index will go to 10,000, you laugh at that person. How can you predict 10 years? When I came into the market in 1991, the index was 1500 Sensex. There was no Nifty. In 1992, it was 4500. Let us say I had taken a call option of 4500, okay, for 12-year call option. We are not talking weekly, we are not talking monthly or yearly. Long-term leap. We are talking of a 12-year call option. I just calculated today in Zerodha. It's coming to 3,500 rupees is the premium for a 4,500 at the money call option. That means I'm getting my break even where I begin to make losses 8,000. Nifty 8,000. So let's say it's expiring on May 2004. 12-year I've taken. The guys who sold those call option would have sold that call option to you. Sorry, who bought that call option would have said Sensex went up from 1,500 to 4,500 in 9 months. From 4,500 to 8,000 is less than double. It went up 3 times. So can't it go in 12 years to 8,000? So they would have bought left, right, center, and you are sold. Okay, they would have said in 10 years' time the market will go up. That time there was one very famous analyst called SSV. He did a session after budget. He said by 2010, Sensex will go to 1 lakh. Why? Because it has gone 1,500 to 4,500, 4,500 to 9,000, 9,000 to 18,000, 18,000 to blah, 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 like that. Put an Excel sheet. The hall in Madras University Hall was 3,500 people. There was no standing space. I had gone 1 hour early to get a seat. No standing space. Everybody applauded. India is going to be shining. By 2010, we'll see 1 lakh. And he said 1 lakh is conservative. Why? Because we're seeing 1,500 to 4,500. Why can't from 4,500 we go to 1 lakh? After all, it is. So coming back to the example, if you are sold on April 1st, April 20th, April end, 4,500 call option, and you have covered on May 18th of 2004, that's 12 years later, you would have taken home the full premium because on May 18, 2004, the Sensex was below 4,500. In 12 years, excepting for a brief while in 99, 2000, the Sensex never crossed 4,600, never. Here we have people, why can't the Sensex make a new high or a Nifty make new high every 12 months? I'm talking about 12 years. The best years of our life is when, the first 10 years of your life are the best years. The 10 years, we because the market was so bearish or sideways that we thought Sensex will never cross 4,500. That's exactly what happened to us in 2004. If somebody would have said from 4,500 Sensex will go to 21,000 in 3.5 years, we would have laughed at him. today, when you say PSU banks will not do well because they commit frauds, and you don't buy Canara Bank at 190 or Union Bank at 45, when the MD comes on TV and tells you, boss, we have cleaned our books and our NPA is going to come down like anything, we have a provision coverage ratio of 82% or something. It's nonsensical to have 82% provision coverage. You should not have. RBI said you should have only 70%. The banks protested because they said it will hit our profits. These guys are having 80% provision coverage ratio. So it is begging to be bought at 40 rupees. That is Union Bank. When that fellow came and that Canara Bank came at 195, I said, my God, what is this nonsense? What is this price? 195, how it can be at 195? It has to be at least another 30-40% higher. The damn thing went to 335 or something, the Canara Bank. This damn thing has gone to some 85, 88. Of course, I didn't anticipate anything. I'm just telling you. So please do not listen to gurus. Please do not listen to experts. You challenge them. You ask them how many mistakes you made. Where are your mistakes? Teach me how to not make those mistakes. If I make a mistake, teach me how to get out. I am not Abhimanyu. Abhimanyu, I can get in. Teach me how to get out of this. That and only that. And please work hard. See, there is nothing. I went to management institute the other day. In June, there was fear because it was 15,600, 15,200 also went, 15,800. So I gave a 3-hour lecture. They told me they'll pay me 2,000 rupees per hour. I said, okay, 2,000 rupees per hour. 6,000 rupees they promised. 3 hours I gave lecture. After the lecture, I told them why you should not be bearish on India. I gave them example after example after example from 1991 till 2020. After that, the principal tells me, sir, but everybody is saying you go to 12,000. No, so what is this you are saying we should be bullish? Right now it is 16,000. Can't we buy at 12,000? I said, on what basis, sir, it will go to 12,000? Because if I speak good English and wear a coat and have an accent and come from Harvard, how does it make me better? Vic Nader is from Harvard. How does that make better? Anybody better? So you have to do analysis. Analysis tells me there is very, very low probability. You cannot say zero. The very low probability. But what if it goes up? I asked him, what if you miss this opportunity? No, sir, I'll get next month. A month ago, one of the professor came and asked me, sir, tell me some stocks. So I told him, you're asking me at 18,000. I have to tell you different stocks. After hearing all this, he says, sir, can you tell me some stocks which will go up in 15 days? I said, boss, you don't come to me. I am not that guy. The stock may go up in 15 days, but I'm not that guy. I bought on stock called LTTS. I said, boss, I don't want to get in because there is a lot of layoffs in US. So I sold LTTS. And I mentioned that in Clubhouse. Next day, LTTS went up by 9%. So people said, sir, what, sir, you sold, sir, and it went up 9%. How do I know? I only felt at that -9 that it was expensive. It was not a stock which I want to hold. And now the damn thing is below that, below my sale rate, below further. I don't know it exactly. I was uncomfortable, so I sold it at a profit. The profit I took because I said God has given me, and He's also given me warning that tech will suffer in 2023. Don't be in tech. That is my perception. But if you ask the experts, they'll tell you be in tech, be in metals, because China is going to do well. For me, the simple thing is, if a stock is or a sector is popular in 1 year, it will take at least 2-3 years for it to gain the same popularity. So tech was very popular in 2020 up to 2022 January, February. Metals was very popular in 2021. So was specialty chemicals. So was the BOP stocks. I don't think this is my understanding because I read. I'm confident when I do this. So I know PSU banks or PSCs, nobody likes that. So nobody is there in that bus. So I want to get into that bus when nobody is there. And I want to get out of the bus, hopefully, when everybody jumps in. It's like your local train. On a Sunday morning, from Churchgate, if you go to Andheri, the train is reasonably empty. So, but if I'm saying I'm going to do this up and down, and Monday morning, also I'm sitting in that same train, you know what is happening. So I don't want to go into the train on a Monday morning. Yeah, Prince, I think I've taken enough time. I'm feeling very, guilty.
No, sir, not a problem. The talks are interesting, but again, at times, times 5-10 minutes is fine. So it was really great to have you today, and for sure this is not the only interaction we have. So going forward, we look to more such candid and honest what we say conversations, which has surely added great value to our attendees today. And as a token of respect, our attendees can follow us so that we get the necessary motivation so as to bring more learned people and their insights of decades. They can talk about their mistakes from which you can learn that the market is not something a very easy or happening place. You have to keep your expectations reasonable and you have to set a process. And again, there are several pockets within the market which works for you well and good, which doesn't, you should improve upon. So anything on my podcast you want to add, sir, before we close?
No. See, I met you accidentally. You are an accidental investor, you said, but you are an accidental friend in the sense. See, if I had not come to that session, I would have lost a friend. So there are always opportunities in life. So this was an opportunity which God gave me, I would say, to meet you, at least online. Most of my friends are online. So it is for me, it is very important. And what struck me was you are willing to listen instead of trying to push your agenda. That is what I find generally. Nobody likes to listen. You did not do that. You gave equal amount of time to others. You have listened patiently. Patience is one thing which is not there nowadays. So I'm really thankful, Prince. I hope to be in touch with you. From where are you, sir?
Delhi, sir.
Okay, Delhi. I have not come since last 5 years. One of these days, I'll probably come, and maybe we'll have a cup of tea. And surely I will tell you some more stories because I'm a storyteller. Basically,
We'll
I got so many stories.
We'll eagerly wait for your travel, sir, and surely we can arrange an investor meet if you come sometime. So with this, sir, I take your leave, and thank you again for sparing time so as to share your experience. And guys, as we say, this is more on educational session, so please take it with a pinch of salt and a starting point for your doing diligence. And this is the intention of session was to share sir's experience and I mean more on educating you about the experience he had in the past and what were his learnings primarily. So with this, I take your leave, and if you're liking our work, please share your feedback and you can also give us a follow.